is Bloomberg Surveillance. I'm Rishka Gupta with your Bloomberg Business Flash. Experts are warning that the coronavirus vaccine from Pfizer and BioNTech still has many hurdles to clear. Results from tests fueled optimism that the world will soon have a way out of the pandemic. Still, there are questions about the vaccine's production, distribution, and safety. Pfizer expects to have safety data for people in the trial by next week. Bayer may face up to 4 trials in the U.S. next year over its Roundup weed killer. A judge in San Francisco says he's ready to resume putting cases in front of juries. Bayer announced an $11 billion settlement plan in June. Still, there are thousands of lawsuits accusing Roundup of causing cancer that haven't been resolved. And for the first time ever, there are now 5 people on the planet who are worth more than $100 billion, according to the Bloomberg Billionaire Index. French luxury titan Bernard Arnault joined the club yesterday. Promising results of a coronavirus vaccine pushed stocks higher, including Arnault's LVMH. Other centi-billionaires include Jeff Bezos, Bill Gates, Mark Zuckerberg, and Elon Musk. And that's your latest Bloomberg Business Flash. Tom Francine.
Thank you so much, Ritika. The focus firmly on the markets. We're not seeing the rally that we saw yesterday or even on Friday. The focus is maybe on some of the hurdles that we're seeing in the vaccine. Let's get the data board up for you because I wanted to show you what we're doing here in Europe. 0.6% higher than we look at also some of the European bond yields. Gold, 1,876, and then the U.S. 10-year at 0.94, Tom.
Watching the yen more than anything, Francine, it indicates a weaker yen, 105.28. Euro yen, take out the dollar, 124.14. Really has shifted gears here. Stronger euro, weaker yen over the last number of days. I should note Turkish lira from that huge 850 weakness down. Strong lira. It reverses today. 8.24 lira. Turkey in crisis. Please stay with us. Jeff Sachs next. David Ricks of Eli Lilly on the pandemic and on their medical solutions. David Ricks in the 8 o'clock hour. Please stay with us. This is Bloomberg. Good morning.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Climate change is happening. It needs to be repeated over and over. Whether transition to a carbon neutral economy takes place in an orderly fashion or in a disorderly one, there will be impacts on the financial system.
126 governments have now committed to net zero, including 3 global giants, China, Japan, and South Korea, in the last few weeks. At a minimum, companies must disclose whether the assumptions in their accounts are aligned with Paris.
We also must harness the firepower of the financial sector, and this means we need policies that nurture sustainable finance and mobilize funds for green investments.
I'm pleased to announce a launch date, June 2021, next year. The exercise will explore 3 different climate scenarios, testing different combinations of physical and transition risks over a 30-year period.
By the end of this year, we're going to lay out for our stakeholders how we intend to align with the Paris Accord.
The economic challenges of the climate transition are phenomenal. And then I ask myself, how much does it cost? A lot. But nothing that we cannot afford, because the cause is our survival.
Leaders there discussing the economic challenges of climate change and the concrete actions needed at the Green Horizon Summit in London. Now, still with us is Jeffrey Sachs, Columbia University Professor of Sustainable Development. Professor, when you look at ESG investing, is this a way of greenwashing, or is there a danger that we could be greenwashing because we talk about this transition, whereas actually there would be a better, more efficient way of doing it?
Well, I think the right way to do it is to have a national plan that is oriented to reaching net zero emissions by mid-century. As you just heard in the story, Korea and Japan have both just committed to reach net zero emissions by 2050, China by 2060, Europe in the European Union and in the European Green Deal by 2050. This is both scientifically accurate and economically and technologically somewhat straightforward, actually. The basic pathway to get to net zero is known, and it makes economic sense, and it makes sense in terms of climate risks. So we will go that way, and President Biden will put the U.S. into the same kind of commitment, and then investors that resist that will be absolutely fighting against the actual technological and market trends. Those who have invested in fossil fuels in recent years have lost fortunes because it's a terrible investment. I could have told you that 5 years ago, I did. 10 years ago, I did. The worst investments in America during the past decade have been in fossil fuels. That will continue to be the case because we're moving to wind, solar, zero carbon power. We're moving to a national modernized grid. We're moving to electric vehicles. We're moving to electrification of heating. All of this is technologically straightforward and not very expensive, actually. This is the statement that was made that it's going to cost us a fortune is just not correct, actually.
Okay, but I guess the question is, unless there's mandatory disclosure of some of these financial goals so that investors actually know what they're investing on, unless that's mandatory, will it take much longer to go through this transition?
We need not only markets deciding this, we need a government that has a policy. Again, we will have one soon. That will change a lot because people will come to understand where it is that we're heading, why we're heading there, and why it's going to be desirable. Cleaner air, safer planet, and essentially at near zero cost. The group that I work with of universities around the United States has put out a study last week. People can look on it online. It's called the Zero Carbon Action Plan, or ZCAP. And it shows in technological terms, in detailed financial and technological terms, how to get to net zero by 2050.
First of all, Jeff, I got to ask you the basic question. Have you been invited by John Kerry or Mr. Biden to be on our committees on climate change? Have you had a conversation with the Biden administration in the last 48 hours?
No.
Okay, Jeff, I just wanted to clear up that news item. Okay, Jeff, here's the reality. I sat on a stage with John Kerry with Bank of America in Davos. He's widely vetted to be the guy that fixes climate change. Except you have a Senate in the United States that's flat out against what you're talking about. How does Biden affect a legislative solution or a treaty-based solution versus executive prerogative?
Excellent. We need legislation. This cannot be just an executive decree. We need to vote this, and we need a public discussion. What people will find, and what senators in red states will find, is they have lots of sunshine, they have lots of wind power, they have lots of workers who would like to be in the industries producing.
Okay, but do you,
Jeff,
do you perceive that the Senate has shifted? If granted, we got Georgia and 2 votes down there. I get it. But is this a new Republican majority in the Senate with Mr. McConnell's leadership versus what we'd see from Chuck Schumer? Is it finally time for Republicans in the Senate to get on board?
I'm actually optimistic, and the reason is there are millions of good jobs in the zero carbon economy, and that, I think, will be the decisive point. I'm speaking with lots of mayors and governors in middle America, and they want those jobs producing wind turbines, solar cells, a smart grid, the batteries for the electric vehicles. They see those jobs coming to Cincinnati, coming to Pittsburgh, coming to the other parts of industrial America. And Trump's had his plan for reindustrializing America. It did not work. He lost those votes, and now it's time for something that will
Jeff,
work.
I got time for one more question. What's car guy going to do? Joe Biden is the most massive car guy president we've ever had. He's in love with electric vehicles. Help us at the Earth Institute. What's the next step that Joe Biden can run forward as president with automobiles?
Well, we are going to go to an all-electric light-duty vehicle fleet. This is happening all over the world. The U.S., as usual these days, is the last to hear of it, other than Tesla, which is a great company and is technologically very sophisticated. But in terms of mainstream policy, all over the world, governments are saying no more internal combustion engine vehicles sold in our country after, say, 2030 or 2035. We're going to have the same approach, and Americans are going to get behind it because it's going to be better driving, and it's going to be safer driving, and it's going to be lots of jobs.
Professor, one quick question. We're out of time. Did you sell the Hummer and get a Tesla?
I don't have a car. I'm in a Manhattan, which is absolutely wonderful.
I'm the same way. Jeff Sachs, thank you so much from Columbia University here at a sea change for our politics nationwide. We'll see what we have from him on climate change in the coming weeks and months. Right now with our First Word News in New York City is Ritika Gupta.
Thanks, Tom. Senate Majority Leader Mitch McConnell has given President Trump cover for challenging election returns.
We have the system in place to consider concerns, and President Trump is 100% within his rights to look into allegations of irregularities and weigh his legal options.
The president has claimed there was widespread voter fraud. So far, those claims have been unsubstantiated. A warning from the Federal Reserve on the coronavirus. The Fed says asset prices in key markets could still take a hit if the pandemic's economic impact gets worse. A Fed report pointed out signs of weakness in the commercial real estate market. And U.S. regulators could give the Boeing 737 MAX the okay to resume commercial service as soon as next week. The FAA is finalizing their review of fixes to the aircraft. Boeing's best-selling jet has been grounded since March of 2019 following 2 fatal crashes. And in Peru, President Martin Vizcarra has been surprisingly booted from the office. The country's Congress overwhelmingly voted to impeach him.
Okay, ladies and gentlemen, I'm going to place a stop on profit for my euro position at 118. Actually, let me go in too fast. So let's see. No, I will. Okay, 118.05. Stop on profit at 118.05. Okay, stop on profit placed.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
So do you get tired of people calling you a jazz legend? Do you feel older when they say that to you?
Yeah, I like the word jazz. I don't like the legend.
This is Bloomberg Surveillance. I'm Francine Lapp in London. Tom Keynes in New York. Tom, of course, we continue to track the virus. Bloomberg has developed this unique partnership with the leading authority on COVID-19. Johns Hopkins has been at the forefront of the international response, and every day we bring you insight from experts in public health, infectious disease, and emergency preparedness. Well, joining us today is Dr. Amish Adalja, Johns Hopkins Center for Health Security Senior Scholar. Thank you so much, Professor, for joining us. There are a number of stories, and the vaccine really taking left, right, and center. A number of concerns or actually hurdles that it has to pass. But how quickly could we get that distributed around the world, and are people willing to take it?
When you think about distributing it around the world, I think we're looking well into 2021. Remember, this is a 2-dose vaccine that requires a very extreme cold chain. It has to be stored at very cold temperatures, and it's going to be a major logistical challenge. I do think we'll start to see vaccination probably of healthcare workers before the end of this year in the United States, but for the world, I think it's going to be a very, very long process.
Good morning. Tom Keene in New York. Does this signal that we will see other vaccine announcements in the coming weeks?
I do think the fact that this vaccine is getting closer to the finish line argues that many of the other ones may also have similar efficacy data that we're going to see, that they may work well, that the safety profile looks good, especially ones that use the same technology, this mRNA vaccine platform. For example, the Moderna vaccine uses that, and there are others that are kind of near the back of the pack that are using those technologies. So I do think we're going to hopefully be blessed with multiple different vaccine candidates to choose from.
What about simpler, non-74 degrees centigrade, below zero liquid nitrogen, got to keep it cold vaccines? Can they come to fruition here?
Yeah, they will. There are companies like Johnson & Johnson that are working on vaccines like that. Remember, these first vaccines are the one, they're there for a reason, because these are ones that you're using a technology that is new, that can rapidly get you a vaccine candidate. More of the traditional vaccines that don't have that same storage requirement are kind of percolating along, and you don't hear about them because they're not in the headlines, but they are making their way. And we may eventually have this vaccine and then have that vaccine replaced by a second generation vaccine that's much more logistically easier to give and doesn't require 2 doses, doesn't require cold storage.
Dr. Jalja, just hold that thought 1 second, because we have some breaking news out of Amazon. Amazon facing an antitrust complaint for the European Union regulators. This has escalated into an investigation into how it handles data from rival sellers on its massive online retail platform. We're also just hearing from Commissioner Vestager saying she does not have a problem about the size of Amazon. Now, we understand that some of, well, how big the fine could be is actually pretty huge. Now, some of the EU objections have laid out evidence in the Amazon sales platform probe, and of course, this is just a further escalation of the probe. But this is what Amazon is doing pre-market. You can see down 2%. A lot of questions about whether the regulators will then go further and possibly breaking it up or not. So let's take a pause on Amazon. We'll come back to Amazon shortly, but it does feel hugely significant. And of course, you can see a bit of a move in pre-market. Let's go back to COVID and Dr. Amish Adalja. Dr. Adalja, is it safer to catch COVID now than it is in March, or is that a myth?
It is probably something you would rather have now, when we have at least some understanding of the pathophysiology, what the disease causes in people, the complications, how to prevent them. We have better diagnostic testings. We have tools like dexamethasone, remdesivir, better strategies on the with oxygen delivery with mechanical ventilators. So I do think you fare better now if you get COVID-19 in November than you would have if you got it in January, February, or March. The caveat is if you're at a hospital that's under stress, all of those gains can be erased if your healthcare workers are overtaxed and unable to deliver the standard of care that they're used to delivering.
Dr. Malja, is it possible that actually the vaccine only protects you from infection for a couple of weeks or a couple of months? And is this linked to what we read and actually studied in antibodies, or are the two not linked?
They are linked somewhat, but I would say that vaccines do induce antibodies that are probably going to last you for several months. And what happens then, it's normal for antibodies to fall after that period of time. And then what happens is you get re-challenged with the virus. You come in contact with the virus in the wild, and then your antibodies go back up. So it's important to remember that you have to actually do these studies and see what happens to people when they're re-challenged. But I suspect it's going to be months to years, and it's not just antibodies, it's also T cells, that another arm of the immune system that also get primed to fight this virus. So I do think this likely is going to produce a robust amount of immunity that lasts probably about a year or maybe more. And we have to just do those studies and follow those patients out to be able to get a better idea of that.
All right, thank you so much for all of the insight, Dr. Amish Adalja there of Johns Hopkins, and be sure to check out VRUS Go on the Bloomberg for the latest information. You can also tune in every day for our exclusive conversations with Johns Hopkins experts for an inside look at battling COVID-19. In the last couple of minutes, we have Amazon, and this is Commissioner Vestager speaking to reporters at a press conference in Brussels. I believe Mrs. Vestager is still speaking right now. She has basically said that she has issued a so-called statement of objections and also opened a second probe into whether the biggest online retailer is giving preferential treatment to its own retail offices and marketplace sellers that use its logistics and delivery services. So Amazon is now facing an antitrust complaint, I think the second one from the European Union regulators, that is really escalating into an investigation. Pre-market, Amazon down 2%. We'll have plenty more on that story next. This is Bloomberg.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Well, the European Union has long been the most aggressive regulator when it comes to looking at big tech, and the Commissioner of the European Union, Madame Vestager, just moments ago announcing that Amazon is facing an antitrust complaint about the use of seller data, and of course it is the second antitrust complaint that Amazon has been hit with. For more perspective and analysis, we're now joined by Aitor Ortiz. He's a Bloomberg Intelligence legal analyst. Aitor, we were just talking in the break. Thank you for joining us. And you were telling me that it's not really the size of the fine that would worry Amazon. What would be Amazon's biggest concern today in receiving this notice from Commissioner Vestager?
Well, thank you. I think that the biggest risk right now is that this is the next step in a formal investigation. Now the Commission has reached a preliminary view that the Amazon's activities or conduct might be anti-competitive. So definitely there is more risk of a negative decision at the end of the road. And probably the biggest risk here is to have what we could call a functional separation of the dual role that Amazon has as marketplace provider and also a participant and seller in that marketplace. It's not the same as a full breakup. I don't think a breakup of the company is on the table right now, but definitely a more functional separation of certain activities is in the horizon.
How concerned should they be about this sweeping legislation that could come in the EU to enable regulators to head off bad tech behavior? So if you tell me that the fines aren't enough to scare these tech giants, what will?
Yes, I think you are right. I think the risk of a fine isn't a big deal given the resources.
Position closed on euro at 118.055. You can see the close position that was holding short from last week, I think, from 118.155, and now we closed short position. Okay.
Implement all these enforcement actions, all this proof that we've seen on tech giants. We can say Google a few years ago, now Apple and Amazon seems to be in the spotlight. So we see that the enforcement wasn't enough deterrence for the companies to change. So they decided to take one step further, and apparently, we are not sure yet, but even some of the activities will be banned automatically from the beginning, even without any other investigation.
Aitor, American officials in the past have really criticized some of this regulation or some of what the Commission has been doing to go after big tech. Will they continue to do so? Do they see this as discrimination against their big companies, or is there an appetite for U.S. regulators to start doing the same?
Well, I think there is a growing concern, especially among consumers and about some policymakers, that these companies basically amass certain market power in the companies, and what once was seen as a very pro-competitive and promoting innovation, at least in Europe for some years, has been some voices outside, especially in smaller companies and consumers, that they might be reaping off the benefits from other third parties, and that they are not playing with the same rules in the same level playing field. So basically, first regulators step in to try to look at this issue, but because these companies operate at the worldwide scale, the same practices are happening around the world, and in different countries we see that they are probably in the time they consider appropriate, they think that the same is happening in other countries, and they are also stepping in to check whether this is anti-competitive or not.
Aitor, thank you so much. Aitor Ortiz there, Bloomberg Intelligence legal analyst. Again, moments ago, Margrethe Vestager, the EU's antitrust chief, actually saying that she has issued a so-called statement of objections and opened a second probe into Amazon. She's speaking live to reporters gathered in Brussels. Let's listen in.
How they have taken now Google to court. So I don't think that has anything to do with it. I think there's a much more sort of now global conversation about how to deal with the fact that some of the platforms seems to be either gatekeepers or de facto monopolists in a number of markets that are very important for the development of our economies. And in that global conversation, of course, Europe and the European Commission want to participate. On the cases themselves, they will, as always,
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Particularly, sort of technology landscape, gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Judged is that this is no longer a contested election.
Some clarity around the election and some clarity with a divided government, which I think is actually a great outcome for markets.
The virus and economic growth is more important than the gyrations in D.C.
The balance might be tilting slightly towards accepting a little bit more risk.
The Fed has a very tough job right now. You're out of tools.
Everything is going to be lower and flatter for longer.
It's going to get worse before it gets better. A lot of regions may see double dips.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York and London for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance Live on Bloomberg TV and radio alongside Tom Keene and Lisa Bravis. I'm Jonathan Ferro. This market exploding higher in yesterday's session to kick off the trading week. And Tom, that rotation has legs. Russell Futures, nicely positive, outperforming the NASDAQ. European banks, the trade continues.
Oh, yeah, it continues. I'm looking for an entry point. I missed it yesterday because my brokerage they all shut down, John. I mean, they had such volume. They all shut down. You couldn't trade. I was looking to buy 5 shares of Amalgamated Abramowitz, and that didn't work out. John, you're right. It continues, and you see weaker yen today, 105 and change. John, I just did the math on the surveillance HP12C. Yes, folks, I have an HP12C on my iPhone. John, the fine they're proposing off of Dow Jones in Europe on Amazon is the GDP of Latvia. I mean, it's a small fine. The GDP
That's the regulatory
of Latvia.
story around big tech. I think big tech right now, Tom, has got a much bigger problem given where the stocks were trading in yesterday's session.
Latvia.
The NASDAQ kind of performance is going to be a story that we focus on through the program. Maybe not Latvian GDP. But, Tom, yesterday was a case of buy stocks, ask questions later.
Yes.
And those questions are being asked about this vaccine in development, the storage of the vaccine, the deployment of it, the distribution of it. Their questions will pursue through the next couple of hours.
They're huge questions. We've had some real experts on in this. Paul Hughes from Anglia. John, Anglia is northeast of London, in case you didn't know.
I'm aware.
The acclaimed microbiologist. And look, it's got to be frozen. It's got to be moved. There's issues. But as we just heard from Johns Hopkins moments ago, there can be a lot more vaccines coming on. It's a stew. It's a soup, John, of vaccines.
2 minutes into the show is just coming off the rails, which means one thing. Let's get to Lisa to get it back on the rails. I'm familiar. It's not Tom. Later, Lisa, the data. Let's focus on that.
I could talk about the Latvian GDP and all the data we're going to be getting on that. But instead, I'm going to be talking about jobs. And really, when you talk about this soup of vaccines, the issue is we're not out of the woods yet. The pandemic is getting worse. And the question is, how is this going to affect a labor market that is showing a leveling off in its recovery? At 10 a.m., we're going to get U.S. job openings and labor turnover survey data, a key leading indicator about how robust the hiring scene is. Then today, both at 8:30 a.m. and at noon, we have Dallas Fed's Robert Kaplan speaking with Bloomberg representatives, Bloomberg Live conference with Michael McKee. At noon, there is one Thomas Keene who will be interviewing him at the Council on Foreign Relations, asking him for an entry point. And at 1 p.m., the U.S. is planning to sell $41 billion of 10-year notes. John, the reason why this is particularly interesting is because yields rose, as you know, to the highest levels yesterday since March 19th. The question is, how much demand will there be for this debt at this moment, given how much uncertainty there is, given the sense that we don't have a sense of how high yields can go before the Fed steps in and before reality steps in, that growth is not likely to accelerate in some sort of gangbusters way over the next 5 to 10 years, John.
Lisa, before I touch on the markets, just to clear things up, Michael McKee interviews Kaplan before Tom, correct?
Got that right.
Mike goes first. Mike McKee, and then Tom Keene.
No. It's so McKee is so large, folks. I'm just going to ask the same questions Mike asked at CFR. It's Mike's going to do
the price action this Tuesday morning. Mike McKee first, Tom Keene second. That's how it should be. Going to play on that for the next couple of hours. We're set up as follows this Tuesday morning. That rotation continues if you look in certain places. So a huge theme yesterday was the equal weight S&P 500. Sarah Ponzek telling us that the S&P 500 equal weight, stripping out the muscle of big tech, equal weighted versus the market cap, the biggest outperformance on a single day ever. We'll talk about that through the show. In the FX market, euro-dollar 118, we pulled back by 1/10%. Lisa mentioning the bond market. I'll mention the trading range of the last 5-6 months. The bond market broke in March, so let's go from April through to November. The lows 50 basis points, that was early August. The highs, well, we breached those levels yesterday, and then we pulled back a little bit. Intraday, the highs now 95, 6, 7, 8 basis points or so, Tom. We're at the top end of the range of the last 7 months. It's notable, and it all comes off one day and a huge repricing.
Well, one day, and as you say, John, it's a real mystery about where we go from here. We'll have some good conversations on that, but a lot of betting here. I would just say the Bears were vanquished yesterday, and they're going to have to readjust and readapt as well. John, our audience in East Anglia this morning, extraordinary. We were thrilled that Dr. Alarian is in East Anglia. He's in some, like he's doing like oyster farming or some, get in touch with your inner self thing there. They do oysters.
Oyster farming?
I read a Ken Follett book. The great Ken Follett. I've just started his new book out. And John, he's doing like an oyster thing off one of those rivers.
I'm so confused. Last week it was Guernsey and the US election.
Latvia.
And this week it's the Great Rotation, East Anglia and Latvia. Subhadra Japa is joining us now. She's sitting there wondering what is about to happen on this show.
Still there?
She joined us from SocGen. She's the head of US rate strategy, and I'm pleased to say she's still here. Subhadra, let's just start with the bond market move of yesterday. Your first take, please.
A spectacular move higher in yields, and basically the bond market's been all over the place. First, we unwound the reflation trade after the election, and then we had to reflate in a rush yesterday. So we've broken through some key technical levels yesterday, and I think that the sell-off, like you said, with equities, the sell-off in the bond market could have legs as well. There's just a lot of cash in the sidelines that needs to be put to work, and if there's an opportunity, I think you're going to see a departure away from bonds into risky assets.
Subhadra, a really important question. I did the math yesterday. I used J.P. Morgan just as a giant financial success. And yes, it's come off the bottom, but it's nowhere back to the pre-Valentine's Day trend. It needs to go up another 14% sort of to get back to trend. Don't quote me on that, folks. Those are rough numbers. Did you see a catharsis yesterday going up, Subhadra? Did you see a catharsis that speaks to a new bull market or a new leg of a bull market?
Well, I'm not an equity strategist, so I can't really comment on the equity market. But from the bond side of the equation, I think one of the things that happened after the election was positioning was a lot cleaner. There were a lot of shorts going into the elections that got cleaned out. And when we got this sort of surprise news from Pfizer, you saw this sort of massive sell-off in bonds. And I think that going forward, what the market's going to be focused on is like you mentioned earlier about what happens on the vaccine side of the equation. There's lots of logistical issues that need to be dealt with. It's a very large deployment from perhaps several different vaccine makers, and how that gets rolled out is going to be very key on how the bond market reacts and how equities react as well. And I think for a change, you're going to see more correlation or sort of more negative correlation between equities and bonds, where you see risk on days in equities and a sell-off in bonds.
Subhadra, I'm losing the neat narrative here. I got to be honest. Yesterday, I was really confused because we've got 10-year yields shooting higher, seismic move. You have break-even rates, the expectation for longer-term inflation not doing that much. So this isn't necessarily a surge in long-term growth prospects. And all of a sudden, you've got junk bond yields at record lows, even though we've got an unemployment rate that still is near historic highs in the recent era. What's the narrative?
So, I would say broadly speaking, real yields as well as break-evens are heading in the right direction. We hit a low of negative 1% in 10-year real yields. That's gone up to close to negative 80 basis points. And then in break-evens as well, you saw about a 6 or 7 basis point rise in break-evens. So it's heading in the right direction. That's what you want to see in a reflation trade, higher real yields and wider break-evens. The question is one of caution. It's really hard for the bond market to price in a lot of exuberance in a very short period of time, given the fact that the Fed is very much in play, and there's really no certainty on a lot of fronts. I mean, it's not clear that we're going to get any sort of a fiscal stimulus by the end of the year. Even if we do, it's not going to be of the magnitude that's required by the economy to prevent near-term damage in the jobs market.
Subhadra, you mentioned the Federal Reserve, and for me, it's the recovery through 21 that we all hope for, where the Fed's new reaction function will start to come into its own, where good news will just be good news because the Fed has said we will not step in. How are you thinking about that after the news of the 24 hours?
Well, I think that the Fed is doing exactly what they should be doing, which is they're staying pat, right? There's not much they can do on the monetary policy side to stimulate the economy. What the economy really needs now is on the fiscal side. If there is sort of an unruly sell-off in bonds, and I can see the Fed step in, but there's really no need for any sort of monetary stimulus at the current time. Financial conditions, broadly speaking, are extraordinarily easy. You're looking at interest rates at historic lows, equity markets at historic highs, the dollar is weak. So there's really not much the Fed can do to move the needle. Really, the stimulus has to come on the fiscal side to stop job losses.
Subhadra, great to catch up, as always. Subhadra Rajappa there of SocGen. In this market right now, I want to check in on the price action for you. Tuesday morning, good morning to you all. It's a trend from yesterday, this explosive rotation. And just that trend continues just a little bit. S&P 500 futures unchanged, but where you start to see this is the NASDAQ negative and Russell equity futures still up, Tom, by another 1.8%. That's the story for me. Small caps outperform again. Big tech underperforms. Here in Europe, you see the banks outperform. That was the story of yesterday. It's got some follow-through. Wasn't just one day, and that's the question. Was yesterday just a squeeze or the start of a longer trend?
The squeeze, to me, John, is a key word. As I mentioned to Subhadra, the idea here of a cathartic move, was it or not? I'm going to leave that up to Chris Verone and chart guys like that. But you're absolutely right that it was an abrupt move, but not back to trend. There's a long way to go for all these different categories to get back to trend. John, I just heard from Mohammed again in Stowe Market. I didn't know this, but it's between Bury St. Edmunds and Ipswich, and it's like, really, I've never been there, John. I think next time in London, you and I have to do a road trip to Stowe Market.
Oh my God.
I can't verify the whereabouts of Mohammed Al-Arian right now, and I'm not sure how this conversation
East Anglia.
even started. It started with oysters in East Anglia.
Yeah.
You would know more about this than me. Have you been?
No, I got to go. I mean, I think it's sounds good.
Do you know
there's a really nice guy, another broadcaster, Tom, who you should meet. His name's Alan Partridge. I think you two would get along. Our listeners in the UK will understand that reference, but
as well.
I think he's someone you'd get along with. Alan Partridge. Google him. He's really well known. He's a radio broadcaster, and I think you'd have a lot in common. Tom Keane, Lisa Bravitz, Jonathan Ferro on Bloomberg Surveillance.
Latvian trade
Got no idea where the next hour and 45 minutes goes.
On television.
I'm happy Lisa's right here with
Latvia.
me. David Ricks is coming later from Eli Lilly. Look out for that. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. President Trump's Attorney General William Barr will let the Justice Department investigate potential voting irregularities in the presidential election. But Barr has acknowledged there is no conclusive evidence, and he warned against what he called far-fetched claims. After Barr announced the new policy, the head of the department's election crimes branch resigned. The US is set to hit record hospitalizations for the coronavirus this week. Numbers are soaring in Midwest states such as Illinois and Michigan. Meanwhile, in Texas, the city of El Paso has more people hospitalized with the virus than at 29 states. And starting today, the European Union will impose tariffs on $4 billion worth of US goods. It's a tit-for-tat escalation of a fight over illegal aid to aircraft manufacturers Boeing and Airbus. The EU says it would drop the tariffs if the US removes duties imposed on EU products last year. And the European Union has filed antitrust charges against Amazon. That escalates an investigation into how the company handles data from rival sellers on its massive online platform. The EU's competition commissioner says that Amazon's rules should not favor its own retail offers or those of retailers using Amazon's logistics and delivery services. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
better than expected, not only in terms of job creation, but also a sharp fall in the unemployment rate consistent with higher labor force participation. That's really good news.
Overall, the gain was solid, but even while this is a very robust pace of job gains, it's a lot slower than it has been in the summer months.
Great that we saw the job gains we did, but they still are diminished from what they were, of course, back in April and May. And the scarring, the sort of wounds that were created by COVID are beginning to fester.
I would caution people to look at the top line number because I don't think it tells the entire story. Employment relative to population is still well below where we were pre-crisis, and that's because I think that we're going to have some lasting damage.
Depending on what you look at, jobs creation or the unemployment rate, you have different views as to whether the improvement in the labor force is keeping up or slowing down.
System in place to consider concerns, and President Trump is 100% within his rights to look into allegations of irregularities and weigh his legal options.
Senate Majority Leader Mitch McConnell there of Kentucky weighing in on a contested election in the United States of America from London and New York this morning. Good morning. Alongside Tom Keene and Lisa Bravitz, I'm Jonathan Ferro. Here's the price action. What a way to start the week with yesterday's huge move in equities up, bonds down. This morning, yields up another 2 basis points to 0.94% on a 10-year. The rotation, all signs it continues. Equity futures on the S&P basically unchanged, but big tech underperforms, the Nasdaq negative. Small caps outperform. The Russell nicely positive. Keep an eye on that. Crude, $40.60. Euro dollar, 118.18. We're unchanged there, Tom, on that currency pair. We move away from the markets. Let's get to the politics. This comes from Attorney General Bill Barr, Tom. Michael Barr, our colleague. This came from him yesterday, and it said the following: while serious allegations should be handled with great care, specious, speculative, fanciful, or far-fetched claims should not be a basis for initiating federal inquiries. What did you make of that line, Tom?
I thought it was extremely carefully written, as was the statement by Senator McConnell. They're walking a knife edge between support for their president, the core constituency of the president, and also what the law says. I thought it was absolutely extraordinary. Last night, we saw a major 28-year official at Department of Justice just flat out resign. Joining us now are Kevin Cirilli. How far-fetched, Kevin, is it that this story will continue, or will they be crushed by the courts?
Well, the story will continue so long as the judicial elements of the story continue. And so in terms of from taking a journalistic analytical approach to this, I would note that based on the interviews that I did yesterday and the conversations that I've had over the past couple of days, there are 2 points that I would make here. You mentioned the politics of this. There is a Georgia runoff on January 5th. So Leader McConnell has leadership at stake and the Senate majority at stake. And so you mentioned the president's core constituency. Republicans need that core constituency to turn up and turn out on January 5th in the Georgia special runoff election on January 5th. And that was a point that was made clear to me by sources that I spoke with yesterday. So that's point number one. Secondly, there are still political implications in the short term beyond Georgia. There's the 2022 midterms and, yes, the 2024 open primary for the presidential run. If the president is weighing his future political options, he wants to keep those options on the table, whether it be another run or whether it be playing a kingmaker role. And so those are the political implications divorced from the democratic implications of this.
Clinton, stop. Clinton lost, and the Democratic Party weighed their future implications with a concession speech and a graceful exit. I don't think it's the same, is it?
Obviously, it's not the same. And again, I'm reporting, Tom. And so based upon my reporting, what I can tell you based upon my reporting, what I can tell you is that the sources who made that clear to me yesterday are in stark contrast with other Republicans like Governor Larry Hogan, a Republican from Maryland, Senator Mitt Romney, a Republican from Utah, as well as Gary Cohn, who have come out to congratulate the president-elect, Joe Biden, for his win last week.
I don't want to draw equivalents, but maybe sitting here in London, I have a little bit more space to say this. Tom, I'm not sure what was graceful about the 4-year blame game that Hillary Clinton went on following the election. Was that graceful?
No, it wasn't graceful, but we went through the process of a concession speech, and as Kevin correctly states, John, in the last 24 hours, there's been a partition of Republicans, including the vice president, on a beach in Florida.
Who's going to work through a process. And Kevin, let's work through that process with you right now. I understand you're in a delicate position and can't say too much. Help me understand the dates that you've got in mind. I understand that the states have to certify their results by when? December 8th? Is that the runway we have here from now through to December 8th?
And I would argue January 20th, which is the date of the inauguration. And look, I think in addition to that, there is still transition binders that are being implemented by sources that I spoke with yesterday at the various agencies. They've been working on those transition binders, as is customary, for several weeks in preparation for a transition of power. I would also note that the president-elect is going to be focusing on the Affordable Care Act today. Of course, the Supreme Court taking up ACA today. Beyond that, Leader McConnell spoke yesterday on the floor with regards to fiscal stimulus, the positive developments from Pfizer with a 90% vaccination shot. He says that a standalone fiscal stimulus, that should happen because of the vaccination front. The uptick in cases now forcing the issue of fiscal stimulus to the forefront of the lame duck session.
Kevin, just in terms of other changes that have come as a result of the election, Mark Esper, the Secretary of Defense, was fired by President Trump yesterday, leading to some concern, A, about who's next, and B, whether the military could end up being politicized. What are you hearing on that?
Yesterday, I spoke with Guy Snodgrass. He is the CEO of Defense Analytics. He's the former chief speechwriter for former Secretary of Defense Mattis. And he raised precisely that issue as it relates to the politicization of the military, which has military personnel of all political stripes concerned. This is definitely an unusual development. I asked him point blank if it would lead to chaos or a headache. He said the latter within the defense community, but this is unusual. That said, this is not a surprise. It's unusual in the broader American historical context. It's not unusual for the Trump era.
Kevin, great to catch up, sir.
Thank you.
As always, Kevin's really doing his best to report, not give us his opinion. Bloomberg chief, Washington correspondent. This market, Tom, you do wonder when the story in D.C. creeps onto the agenda a little bit. Pretty much everyone we speak to on a daily basis over the last week, they're pretty comfortable with this contest, this friction, this tension between the two campaigns.
Yes. Yeah, I agree with that. I think there is a comfort about the politics separate from the markets and certainly the recovery we're seeing. But, John, to be honest, everybody else says it gets back to the stimulus debate. I don't hear much about that, John. What I hear about, John, is we've got to drive the conversation forward with a lot of good guests. On your show, Mid Morning Matters with John Farrell, what do you have up today at 9 o'clock?
This is an Alan Partridge reference. I feel like we should actually explain to our audience outside of the UK who Alan Partridge is. Tom, would you like me to do that?
Please do that. Mid-Morning Matters is just important.
Steve Coogan is the actor. He played a role of Alan Partridge, who was a failed broadcaster in East Anglia. And the description of him on Wikipedia, Tom, is as follows. Let me get it up. Partridge is an inept broadcaster whose inflated sense of celebrity drives him to treachery and shameless self-promotion, which is why I thought you two might get along next time you go out there. You know, you get a drink, sit down together and talk about broadcast.
Yeah, on radio and television worldwide, I'm shocked you brought that up, John. Lisa didn't bring it up.
Steve
Lisa
Coogan
was
is
well
listening.
behaved.
I'm watching
Hello,
Latvian
Steve.
GDP.
Yeah, Latvian
I don't
GDP.
blame you, Lisa.
That's equal to the Amazon fine.
You don't say.
We're only
Mid-morning
25
matters.
minutes into the
Mid-morning
show.
matters with John Farrow.
Alongside Tom Keane and Lisa Bravis, I'm Jonathan Farrow. This is Bloomberg Surveillance. The equity market with a lift yesterday. That lift fades on the NASDAQ. It fades again. We're down 1.6%. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
From New York and London, for our audience worldwide, this is Bloomberg Surveillance. Here's the price action. The S&P 500 pretty much unchanged this morning. It's about the spread between the NASDAQ underperforming, the small caps outperforming. And we see it again with the NASDAQ down 1.6% and the Russell futures once again advancing by 1.8%. Keep an eye on that right there. Switch up the board and get to the bond market, a treasury market that has been whipsawed by three different narratives in the space of a week. I want to do two things. Think about the range on a 10-year 10-year, and then I want to think about the steepness that comes back into the curve as well. 30-year yields are higher to 172, 10-year yields are higher to 0.94%, and the 2-year creeping a little bit higher, but anchored by the Federal Reserve. That's going to be important in the months to come. If we get a bit more hope, a bit more optimism, that's when the reaction function of the Federal Reserve starts to kick in, and that curve, maybe, if the Fed backs off on QE, has some room, some space, some life to steepen. In the FX market, here's the story for me, euro-dollar, 118. If you get close to 120, if we breathe more life into that dollar weakness trade, when does the ECB step back in? That's what we've got to think about. 119, 120. We saw a 119 handle yesterday. We retreat. I imagine this is not what the ECB wants to see. Tom, there's two phases to this. The ECB will take 118. I don't think it likes 119. We know it hates 120. The next 3 months in Europe are still going to be really, really difficult. And it's the two phases to this. Up front, winter, tough. On the horizon, a vaccine, maybe, better. But you've still got to get through the next couple of quarters.
And the pros are way, way far apart from where that talk is of, say, 119, 120 strong euro being a challenge. The pros are out at 125, 130, and even higher. We'll have to see on that in the coming months. Vasilios Giannakis joins us right now from Bank Lombard Odier, and we welcome all of you on Bloomberg Radio and Bloomberg Television worldwide. Vasilios, I want to go to the yen. Is one of the tea leaves yesterday. The yen has had a significant strong yen trend, and yesterday was a massive catharsis out to weak yen. Does it signal a breaking of a trend, or does it reaffirm strong yen into the weeks and months ahead?
That's a brilliant question, Tom. I don't think it actually signals a significant break in the trend. I think it rather shows that we may be in for a period of somewhat consolidation or even more gradual decline. Look, I mean, yesterday the dollar yen had a 2% move. It was the biggest daily move since mid-March. And that was driven, one, by the vaccine news that was extremely important, brutal risk on. And at the second time, we also had the finance minister in Japan who actually said that they are watching FX moves with quite urgency, with big urgency. I think in general we go on a fundamental basis. We go lower from here, but I think as we go lower, the voices coming out of Japan expressing discomfort, they're going to start, becoming more and more vocal.
Right. As we do economics, finance, investment, and politics, Vasilios, it does fold into a President Biden. Let's say he's not going to say someone's a currency manipulator. President Biden is not going to put in restrictions against China. Just for instance, how does your world change? How does FX change with a President Biden?
Well, I think by far the most important thing we need to take into account is that now the FX world will stop being dominated by the Trump-related risk premium. And by that, I mean a combination of heightened uncertainty about the next move of what the president is going to do, a return to normality, and thirdly, and I guess very importantly, the pricing out any residual risk premium attached to the possibility of trade tensions. And don't get me wrong on that. Democrats are quite hawkish on China, they're quite hawkish on Russia, but it's quite clear that Biden opposes tariffs, and it's quite clear to me that he's going to go through the road of diplomatic maneuvers, building allies. So making a long story short, I think now currencies are being held back into where they belong, and that is their fundamental playing field, meaning that they're going to be moved more by the underlying economic fundamentals and less by the political shocks that we have experiencing over the past 3-4 years.
Well, Vasilios, let's talk about that and start with Europe, because the fundamentals in Europe right now, not pretty at all. We've got lockdowns across the continent, from the UK to France to Germany and elsewhere, and we're looking at an economic contraction once again, potentially in 4Q. What's the call on euro-dollar with the fundamentals in mind?
Very good question, Jonathan. I think euro-dollar goes a bit higher from here. I think potentially we're going to break above 120. Then gains are going to start moderating, because above 120, euro-dollar is going to start looking a bit overvalued. However, having said all that, because you mentioned a number of fundamentals, we need to highlight, first of all, that the stringency of the lockdowns are not that high compared to the ones that we endured back in March, April, and May of this year. The other thing you need to take into account is that actually the big rally in the dollar and therefore the big fall in euro dollar did not occur during the first lockdown, but in advance of it, in anticipation of it. The euro dollar starting bottoming out in the first lockdown as soon as it started getting implemented. So I think to a certain extent that's already in the price of the euro. But what is also very important for euro dollar is what's happening to China, because there is a great reliance through the export channel. And it's very clear that China and the Asian satellites around it are doing fairly well. Now China is above pre-pandemic levels. So I think Europe fares well in this environment.
Vasilios, we've touched on this several times on this program over the last couple of weeks. Europe not great, China good, the United States somewhere in between, and that's what I want to sit on just for a moment. We've had new restrictions in Massachusetts, new restrictions in Utah, and yesterday we found out new restrictions, mild ones, coming from New Jersey. Is that a trend you should be worrying about and starting to think about a little bit more on this FX market? And maybe it's a trend that's being drowned out by the vaccine news of yesterday. And I think for market participants right now, Vasilios, everyone's trying to work out what they should do with these data points, these reference points that could get worse in the next several months.
Look, Jonathan, I think it's quite clear from the previous episode that we have had that the US has typically lagged by approximately a month in terms of the rise in infection rates. So it is not really something, the fact that we have started seeing an acceleration in infection rates in the US, that should come as a very big surprise. I think what matters from here in terms of the effects is going to be what's going to happen to the global arena and to global trade. In terms of the US, I think the confluence of the Biden victory, which is likely to promote a number of hygiene measures that hopefully they're going to be adhered to by the citizens, and the fact that we are getting very close into the release and distribution of a vaccine is going to be something that the market is going to discount. I don't think the FX market right now is going to be affected by a rise in infection rates in the US, because they are already discounting the distribution of the vaccine, which everyone knows that it will take some time. It will be until the earliest, the second quarter of next year, until it is widely distributed. But what mattered for markets back in spring of 2020 was this complete lockdown, was this halting of manufacturing chains, of tourism. And now we're not going to get that kind of repetition, I think.
So, Vasilios, people are looking past this, looking to the time of a vaccine and surging world growth, and they're seeing what you said, strength in China, which is the reason why the Chinese currency is strengthening to about the strongest levels versus the dollar since 2018. How much stronger can the yuan get before the PBOC steps in and tries to weaken it a little bit to even the playing field or strengthen its position with trade?
Look, again, very good question. But I think when we talk about currency strength, we have to talk about the drivers of the currency strength, and we have to contrast that to what the underlying economic dynamics. And I think what I'm about to say about China plays out to a large extent about the Eurozone and the ECB. I think it's quite clear that China in general is making steps and has made steps towards liberalization of the capital markets. The Chinese knew that the yuan is going to strengthen as soon as the news are being announced that bonds, for example, are going to be included into a number of indices, largely because asset managers are going to rebalance or start rebalancing towards them. I think the tolerance for renminbi upside is relatively okay. I wouldn't say that the PBOC at current levels is getting worried. If we start reaching a point at which it becomes quite not in sync with the global, with the Chinese recovery then it would be something that the PBOC, I'm pretty sure, has a plan B. Let's not forget that pre-trade wars, dollar-China was actually trading at significantly lower levels than we're currently at. So I think it's it's within the realm of possibility that we're going to see dollar-China at 650 or even 640 without the PBOC really getting too anxious about it.
Getting closer to it. Vasilios, great to catch up as always. Vasilios Giannakis there of Bank Lombard, ODA. Staying on top of the price action this Tuesday morning after a huge move in the last 24 hours. Equity futures shaping up as follows. The NASDAQ once again underperforming.
Yeah.
That spread, Tom, between the NASDAQ and the Russell, just unreal. We're down 1.5% on NASDAQ futures, on the Russell up by about 1.8%. Question of the last couple of days, Tom, is the risk where the perceived safety once was just a couple of weeks ago?
Well, it's not only that, but it's absolute or relative return. And of course, in different parts of global Wall Street, you're worried about absolute return. And in some cases, it's all relative, like off a benchmark, et cetera. But the gyrations yesterday, the key thing to me, John, is was that a one-off or not? And I know you're going to discuss this at 9 a.m. on your show, The Day Today with John Farrell. I mean, I just can see it coming. We're going to get the markets open in the day today, and then you'll move on from there.
I don't know if the Day Today got a second series or not, Tom. You have to watch Alan Partridge to understand all of this.
Bloomberg Radio.
Promise me you will.
We will do that. On Bloomberg Radio, you're not the first person that's told me this. On Bloomberg Radio, on Bloomberg Television, we're having a lot of fun with this morning within the serious markets. And of course, John, all kidding aside, the serious political moment of the last 12 hours.
Yeah, very much so, and not just down in Washington, D.C., a serious political moment for a lot of the governors in states across America facing what is still a crisis, a pandemic. Kathy Hochul joining us next, New York's Lieutenant Governor. Looking forward to catching up with Kathy. From London and New York, this is Bloomberg.
With the First Word News, I'm Ritika Gupta. Senate Majority Leader Mitch McConnell has given President Trump cover for challenging election returns. McConnell says the president is within his rights and has no obligation to accept projections based on vote counts that Joe Biden won. McConnell and other Republican leaders in Congress haven't congratulated Biden since news media called the election in his favor on Saturday. Obamacare returns to the Supreme Court today. Justices will hear arguments over whether the Affordable Care Act is constitutional. The Trump administration and conservative states argue that it's not. They say the entire law was rendered unconstitutional when Congress eliminated the penalty on those who remained uninsured. If the majority conservative court agrees, more than 20 million Americans could be left uninsured. U.S. regulators could give the Boeing 737 MAX the okay to resume commercial service as soon as next week. The FAA is finalizing their review of fixes to the aircraft. Boeing's best-selling jet has been grounded since March of 2019 following 2 fatal crashes. And for the first time ever, there are now 5 people on the planet who are worth more than $100 billion, according to the Bloomberg Billionaire Index. French luxury titan Bernard Arnault joined the club yesterday. Promising results of coronavirus vaccine push stocks higher, including Arnault's LVMH. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
It's clear that this vaccine, even if approved, will not be widely available for many months yet to come. The challenge before us right now is still immense and growing. And although we are not in office yet, I'm just laying out what we expect to do and hope can be done, some of it between now and the time we are sworn in.
President-elect Joe Biden there on the tough road ahead. A tough winter ahead for many of us, including in the United States of America. This market right now, not living in Q4 2020, living in the second half of 2021, seemingly, in a better world. The equity market unchanged on the S&P 500, down about 1/10 or so. Let me give you a flavour of what's happening beneath the surface here. The Russell small caps doing nicely. If you want to pair trade, short Netflix, long AMC. Netflix down another 1.4%. It was a rough day yesterday. AMC, theatres, entertainment, had a huge session yesterday, and in the pre-market we're up another 11%, Tom. Just gives you an idea of that shutdown reopening trade and how it's playing out at a stock level.
Very good. What we're trying to do, John Farrow and Lisa Bramowitz, and to all of you on radio and TV, is bring you more than the markets. We're looking at economics, finance, investment, this horrific virus as we speak to scientists. Sometimes we speak to politicians. Kathy Hochul is the lieutenant governor of the Empire State. She knows the trajectory of the Erie Canal as it opened up western New York. And from Onondaga to Monroe to Erie County, it is a yellow zone. The lieutenant governor joins us this morning. Kathy, what is a yellow zone and what does it mean as you confront a new virus?
Well, thank you for having me back on the show. And yes, I'm embedded in that yellow zone right now. Yellow means caution. And it says that if our numbers don't start trending downward, reversing where we've been for the last 2 weeks, we'll be in a situation where we head into orange and red, and those mean we'll have shutdowns. And we'll be trying very hard not to get to a situation where we have to reverse the progress we've made on reopening. But our schools also have to do more testing. We've limited the number of people at gatherings. So it's not the worst case scenario, but it's a warning to our residents here that I've been saying for days now. Change your behavior or you'll be locked out of your favorite restaurant. You have no chance of going to a football game in person this year and a lot of other consequences. So it's basically trying to say beware and change your behavior starting today.
Lieutenant Governor, the conceit is the big cities have ample medicine, ample hospitalization. I think of Strong and that complex in Rochester. Over in Buffalo, you've seen a positivity rate that has just exploded. Are you concerned with Governor Cuomo about the hospitalization facilities available?
The good news is that we are prepared for even more capacity, far more capacity in the early months of this pandemic. And the governor made sure that we had ample supplies of PPE in all the hospitals. Each one was required to have at least a 3-month additional supply. I've been in regular touch with their leadership of the hospitals. Yes, our numbers have gone up, but it's about maybe 90, 100 people in hospitals in Western New York. We can handle that now, but you're absolutely right. It's something that if the numbers, the number of people testing positive, if they turn into serious cases and hospitalizations required, we're going to have to get back to the eliminating the elective surgeries and a lot of the unessential procedures that are now going on. So we can create the capacity very quickly, though. We actually have, unfortunately, a lot of experience dealing with this, and we'll be able to handle it.
In the meantime, Kathy, yesterday we got incredible news on the vaccine front from Pfizer. A lot of people expecting a turn, perhaps an end to the pandemic next year, but there's a lot of daylight between now and then, and some people saying that will reduce the emphasis on a fiscal support plan from Washington, D.C. From your vantage point, how much does this take pressure off of Washington to help with the $12 billion bailout for the MTA, to help with the unemployment as more people get laid off as the virus counts go up, and just help financially going forward?
I don't think they're related. I don't think that having a vaccine takes the pressure off at all because we've already lost that money. We've already lost the revenues and the fees generated from people using our transportation systems or from the sales tax revenues that were not collected, and the extraordinary costs that we had to incur just fighting this pandemic and are still paying for now. That's not gone away with the vaccine. And the truth is this vaccine is going to take a while to be widely disseminated and have a real impact. Now, Governor Cuomo this summer started working on this, very early on to have a widespread distribution plan in the state of New York, one that's quite different from what the White House is proposing, where they're saying they're going to get it into the hands of doctors and to the pharmacies, which is great if you live in an area that has a lot of doctors and pharmacies. But large parts of New York City are what we call healthcare deserts. They don't have a Rite Aid or CVS or Walgreens. I mean, where are they supposed to get it? So we're focused in New York on making sure that communities that have been hardest hit, that make sure that they're not left out of the distribution of the vaccine early on as well, because many of those individuals in the Black and brown communities, they're the frontline workers, they're the healthcare workers, they're the MTA workers. So we want to make sure that the plan includes everyone and is fairly distributed as quickly as possible.
Lieutenant Governor, just to finish on a final question about restrictions. We've seen restrictions from Massachusetts, we've seen it from Utah, and yesterday evening we saw it from the governor of New Jersey, Mr. Murphy. Now, Phil Murphy outlined a plan that we're all familiar with here in the UK, which is to close down indoor dining from 10 p.m. We're familiar with that because it didn't end there. Something else came next. Kathy, do you see merit in that approach? Lieutenant Governor, do you think that is a good approach to allow indoor dining to shut at 10 p.m.? Does that make sense to you?
To stop at 10 p.m., we actually have restaurants have to shut down at midnight in New York City, and that is part of our yellow zone. In fact, in upstate New York, those counties that you referenced earlier will now be having restaurants shut down at midnight because people tend to, the more you drink, the more you're out, more likely to gather at parties afterwards. Just analyze human behavior. Your defenses go down the more alcohol you've consumed, the less likely you are to be compliant about wearing the mask. So we think it makes sense.
The issue that we have here, though, Lieutenant Governor, is it didn't stop there, and it clearly wasn't sufficient. You're not at all concerned that 12 doesn't make sense, 10 doesn't make sense, that actually you need to get ahead of what's about to happen through winter?
Well, you're asking if it's going to be more restrictive. Well, the numbers will dictate that in the state of New York. And New York City's infection rate was 1.8% on Friday. It has creeped up to about 2.5%. So clearly, yes, we are watching those numbers. And as we head into various zones, the one zone that does require a shutdown of restaurants is the red zone. What we're now doing is limiting the number of people at tables. You can't have 10 people at a table. You can only have 4. So everything you're talking about, we are watching what's going on in other states. But New York still maintains that we are the lowest large state infection rate. I think a couple of rural states are maybe a little bit lower than us. But we want to maintain that. And you're absolutely right that everything has to be on the table to consider if we get to that situation.
Lieutenant Governor, we appreciate your time, and hopefully we'll catch up again soon. Kathy Hochul there. Tom, this was the experience for many countries across Europe as well, of course, dictated by the data, but this is how it started with restrictions around indoor dining. Then it was more of a regional approach. They tried to stick with that, the tiering. And then what happened? France, Germany, the UK, lockdown, bang. And the worry is, looking at the United States and the trend of infections, how far behind is the United States? We hope the United States doesn't go there, but that's the concern.
Well, the cases are explosive. I'll be honest. I don't look at the case math. I look at the ratio to deaths. It's not good. It's not as grim as the cases, but the death numbers are up. But, John, to me, the constraint is hospitalization.
From New York and London this morning, good morning. This is Bloomberg.
The big concern is climate change. We can see the global warming accelerating at the moment, and the goals that we must hit are so ambitious. It's 1.5 degrees by 2050, being climate neutral in terms of emissions by 2050. That's a huge challenge. We have to reduce emissions by 50%, 2030, 2040 again. It's very, very ambitious, and mobility plays such a crucial role in there. One thing is to do it in developed countries. I think we're going to get there by 2030, but then the rest of the world, and that's just as important. If you look at developing countries, emerging countries, that's where probably the biggest challenge we are going to face, to also deploy EVs there and make mobility greener in those countries. I know it's possible to move mobility forward fast enough to be able to do its part in this fundamental threat that we're facing.
So do you get tired of people calling you a jazz legend? Do you feel older when they say that to you?
Yeah, I like the word jazz. I don't like the legend.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Markets will probably judge this that this is no longer a contested election.
Some clarity around the election and some clarity with a divided government, which I think is actually a great outcome for markets.
The virus and economic growth is more important than the gyrations in D.C.
The balance might be tilting slightly towards accepting a little bit more risk.
The Fed has a very tough job right now. They're basically, you're out of tools.
Everything is going to be lower and flatter for longer.
It's going to get worse before it gets better. A lot of regions may see double dips.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. We welcome all of you on Bloomberg Radio across this nation and Bloomberg Television. Extraordinary market action yesterday, truly historic. We'll get to that in a moment with someone who has a wonderful tapestry of the history of the market. But before that, we've got to look at the news flow. And John, I really don't know. Are we still doing election 2020, or are we moved on from that?
I think the last 24 hours we moved on quickly, but maybe it should come back on the horizon, on the agenda in the next couple of days. But for now, Tom, it's yesterday once again extended just a little bit, just a little flavour of Monday's price action. You'll find that in various names like AMC Entertainment. You'll find it in the airlines, the banks once again this morning.
But do the
but
spread.
more broadly, you'll find it at the index level. The Russell, Tom, the relative performance of the Russell versus the NASDAQ, that just continues. You can drive a truck through it this morning. The Russell futures are up by about 1.6%. NASDAQ futures are negative on the session. The cyclicality just starting to come back into this market. But I'd go further, Tom, on this one. Right. You've got to ask yourself where the risk is in this market. And the risk in this market for many people is where people thought was safe just a few months back. That's the Treasury market that's big tech, and that's where the risk was yesterday. And that's what that vaccine news did. It just turned risk upside down.
And as a price losses, you have higher yields. And right now I'm going to round it up, 0.95% on the 10-year yield. That is a lower price, higher yield. Lisa, that's how that works, isn't it?
Yeah, that's how it works. I got to say, I am confused by the narrative. It is not a neat narrative.
It is not a neat narrative.
And I would say what I'm struck by is the fact that suddenly it's the cheapest it's ever been for companies closest to default to borrow money right now, even though we have a high unemployment rate, even though the pandemic is getting worse, even though we don't know anything on the fiscal support side, and even though we don't have really a verdict when it comes to the presidential election, which has not been accepted by President Trump, or frankly, who's going to control the Senate. And this is what I'm struggling with, Tom. The narrative does not make sense to me.
Well, the narrative is a jumble, and John, this goes to overnight, folks, and you'll hear this through the news day, not only the firing of the Secretary of Defense, Kevin Cerulli widely expects other firings this week, even today. John, overnight, Attorney General Barr with an original treatment of federal use of the Department of Justice in this election process, and we saw a major resignation from DOJ on this. John, this is not a small matter.
No, it's not, but it's not on the agenda of financial market participants right now.
Totally agree
in
with
any
that.
way, shape, or
Totally
form.
agree with that.
I find that quite amazing. I think most people just believe this is part of the process. The president will work through the process, and Republicans are allowing him to do just that. What's going to be key for me, Tom, is whether these big states, once they finish counting, whether they certify those results and how quickly they do that. And at the moment, I think a lot of people giving them breathing room, carry on, get it done. At some point in the next several weeks, as we approach December 8th, that gets a little bit more critical. Right now, just it doesn't appear to be the case
And the
at
gentleman from England, getting to the distinction of the matter, folks, and this is important, is the idea of the certification of the elections. We haven't had that yet, and the Attorney General Barr getting out front of the process before certification. Again, futures red and green on the screen, -8. Dow futures go up 199. Mr. Farrow identifies that spread between Russell 2000, the small cap, is indicated by the big tech is negative, big tech negative, Russell 2000 is positive. Sam Stovall has seen this before. He's with CFRA. Well, actually, none of us have seen what we saw yesterday, and it will go in the acclaimed Stock Almanac. Sam Stovall, just your single summary of how unusual was yesterday.
Well, Tom, very unusual. I mean, we were up more than 5% at one point on the day, and then we closed up 1.2% on the S&P 500. So when you look to, closing percent changes, it's just simply a blip. We had 5 times this year that were even substantially stronger. On March 24th, we were up 9.4% in a single day. And so I would say it would certainly add excitement to one's portfolio, but certainly not adding a lot in terms of asset value right now.
Sam, yesterday was a catch-up trade. We can all agree on that. The names, the parts of the market that were left behind, all caught up. Where people thought was safe suddenly became a massive risk. You reprice, boom, 24 hours, done. Or is it? And Sam, that's the question right now. Was yesterday the catch-up trade or the beginning of a durable trend? Now, that's really difficult to identify with one day's price action. But Sam, do you have a call on that?
Well, I think that, when you look to the individual day, then, you're absolutely correct. You had basically 75% of the near 150 sub-industries in the S&P 1500 in positive territory, so it was pretty broadly diversified. The S&P 600 was up close to 5% in the single day. Mid caps were up 3% versus the large caps a little more than 1% gain. I think that because investors are saying we've got 10 companies around the world that are in phase 3 trials of a COVID-19 virus vaccine, that even if Pfizer's stumbles a little bit, we still have 9 more that we can work with. And so Wall Street is looking beyond the valley. It's looking beyond the spike right now and saying 6 to 12 months from now, things will be growing. And the real question is, by how much will analysts be elevating their 2021 estimates?
And we all have to look beyond this valley just to stay upright, frankly, because the pandemic hasn't been that fun. That said, you still have to start wondering about valuations. Yes, we are going to reach some sort of new normal, but we're at record highs, basically, in a lot of the equity indices. And this is predicated on the idea that interest rates will stay low. At what point will Treasury yields rise high enough to offset that narrative, to basically say we have to reset valuations. Yes, it's a better world, but valuations got too high for where rates may be.
Well, good point. If you look at it on an absolute basis, basically everything looks expensive. S&P 500 is trading at 22.4 times next 12-month NTM earnings, which is a 35% premium to its average over the last 20 years. Every sector except financials and healthcare are trading at double-digit premiums. On a relative basis, however, only consumer discretionary and energy are trading at double-digit premiums to the market. So I guess it really depends on whether we're going to be seeing rotation or an actual retreat. Right now, from a technical perspective, I think we have to see interest rates go above 1% in order for us to see a technical rotation from a bearish trend to a neutral trend. And then I think we need to see interest rates rise more dramatically for investors to really get scared and think that inflation is right around the corner.
And just to give some perspective, we now have a 10-year yield near session highs at 95 basis points, so about 5 basis points away from that 1% mark. There is also a question of whether this rotation means losses for big tech or just underperformance. What's your take on that, Sam?
Well, right now we're going for losses or underperformance, actually. Near-term losses, but more longer-term underperformance. When you look at the S&P 500 growth minus value on a rolling 12-month basis, we hit an all-time high in August and then again in September, meaning that going back to 1975, the 12-month percent change for growth stocks minus that for value was at about 35 percentage points, higher than where we were during the tech bubble of the late 1990s. So it just seemed that it was a matter of time before we saw some sort of rotation away from growth and toward value, which we're in the very early phases of right now.
So, Sam, this raises a really important question. Let me build on what Lisa just asked. How much risk is there at the index level for passive investors just sitting and holding the S&P 500, given the weightings of these huge tech names? Apple, 6% of the S&P, Microsoft, 5.5%, Amazon, about 4.5%. Is there a lot of risk at the index level because of the weightings?
I guess so. I mean, when you think about it, you mentioned technology with Microsoft and Apple, but then you've got Facebook and the two share classes of Google in the communication services. You have Amazon and Visa in the consumer discretionary. So it's not just one sector. It is spread around. And so it is a large cap index, and therefore the behemoths do tend to drive the action. But interesting, back in 2008, you would have said pretty much the same thing, ditto back in 2000, yet the equal weight 500 tends to fall more precipitously in the early phases of bear markets or corrections. So it is interesting, but they do offer ballast because of their size, because of their market share, et cetera.
Well, the equal weight had a massive day yesterday. Sam, it's great to catch up, to get your thoughts on this market. What a move we've had. What a week already. Sam Stovall there, CFRA, Chief Investment Strategist. And in many places, the move continues. Netflix, negative. We talked about AMC Entertainment, positive. JP Morgan again, Tom. Huge day Monday. We add just a little bit more weight to that move, up another 1% and change in early trading.
Yeah, I think it's a good point, John. And Amazon down as well. But is Amazon down because of the NASDAQ weaker this morning or because of the EU regulation issues? I would suggest it's more, as you describe, the pullback in the NASDAQ. Now that NASDAQ index down 209 points.
Yeah, what I'm trying to do, Tom, and I'm really trying to understand, yesterday we had a massive squeeze. I get that. The market caught really offside. We need to think about the squeeze and a durable trend. Are we going to generate the kind of recovery over the next several years that leads to higher rates and advantages banks? Or are we going to see more of the same that we saw pre-COVID? Are we going to see that again post-COVID?
I would watch all the markets, but particularly the fixed income market. Yeah, it popped yesterday and went. John, that brings up a really important point, and I saw this with Lister Lester this weekend. Can you explain, you mentioned offsides. Can you explain offsides in soccer? I mean, do we need a beverage of our choice in our hands
Not in the 25 seconds I have, and not with the fact that this is just water.
Because
I need a serious drink to get through that conversation with you.
You put your flag out like this. You put the flag out. I mean, there's a blue line in hockey.
There are no
John,
flag
there's
signals.
a blue line in hockey.
Okay.
Where's the blue line in soccer?
Well, it's a little bit different. It's about where the last man is. I'm not going to
Offsides.
do this right now.
Yeah, Market was offsides.
Tom Keene, Lisa Bravitz, and Jonathan Ferrell on Bloomberg Surveillance. I was talking about a different kind of offside.
Offsides.
The S&P 500, negative 10 points. Up next, the conversation you do not want to miss. David Ricks of Eli Lilly, the CEO, joining us from New York City and London. Beautiful morning again in London and New York.
Well, not in New York.
This is Bloomberg.
With the First Word News, I'm Rishika Gupta. President Trump's Attorney General William Barr will let the Justice Department investigate potential voting irregularities in the presidential election. But Barr has acknowledged there is no conclusive evidence, and he warned against what he called far-fetched claims. After Barr announced the new policy, the head of the department's election crimes branch resigned. The U.S. is set to hit record hospitalizations for the coronavirus this week. Numbers are soaring in Midwest states such as Illinois and Michigan. Meanwhile, in Texas, the city of El Paso has more people hospitalized with the virus than 29 states. In the UK, the House of Lords rejected government plans to break international law over Brexit. They voted to remove the most controversial parts of the internal market bill. Prime Minister Boris Johnson immediately vowed to push ahead with the legislation. It gives ministers the power to rewrite parts of the Brexit deal Johnson signed with the EU. And the European Union has filed antitrust charges against Amazon. That escalates an investigation into how the company handles data from rival sellers on its massive online platform. The EU's competition commissioner says that Amazon's rules should not favor its own retail offers or those of retailers using Amazon's logistics and delivery services. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
better than expected, not only in terms of job creation, but also a sharp fall in the unemployment rate consistent with higher labor force participation. That's really good news.
Overall, the gain was solid, but even while this is a very robust pace of job gains, it's a lot slower than it has been in the summer months.
Great that we saw the job gains we did, but they still are diminished from what they were, of course, back in April and May. And the scarring, the sort of wounds that were created by COVID are beginning to fester.
I would caution people to look at the top line number because I don't think it tells the entire story. Employment relative to population is still well below where we were pre-crisis, and that's because I think that we're going to have some lasting damage.
Depending on what you look at, jobs creation or the unemployment rate, you have different views as to whether the improvement in the labor force is keeping up or slowing down.
outlook for the economy is extraordinarily uncertain and will depend in large part on the success of efforts to keep the virus in check.
They are torturing themselves to explain that they're there, ready, willing, and able.
The Fed has basically done all it can do, with the exception of extreme emergency measures.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I will spare no effort to turn this pandemic around once we're sworn in on January 20th. To get our kids back to school safely, our business is growing and our economy running at full speed again, and to get an approved vaccine manufactured and distributed as quickly as possible to as many Americans as possible.
President-elect Joe Biden there, following the news announced yesterday. Some advancements on the science, and let me tell you, this market ran away with that news. Good morning to you all from London and New York, alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Here's the price action of this morning. Just a little flavour, a sprinkle of what we got yesterday. The underperformance of the Nasdaq, the outperformance of the small caps. We'll keep an eye on that for you going into the opening bell. Once again, Treasury's just a little bit softer after yesterday's massive sell-off, up another couple of basis points on a 10-year to about 0.95%, Tom. Not much action in euro dollar, 118.09. We have a forum at the ECB a little bit later this week. That's worth keeping a little eye on as the week progresses.
No question about that. Let's do this. Let's dispense with the formalities right now and get to David Ricks, Eli Lilly, Chairman and CEO. And I do this. John and Lisa have a lot of questions about the news yesterday. But David, I think there's massive confusion over all of these fancy words, and particularly around vaccine, around antibody treatment. We conflate bacterial and virus therapies on top of each other. How does a vaccine differ from the antibody treatment you announced yesterday?
Well, thanks for having me on, Tom. And exciting news last night with the emergency use authorization in the U.S. for our monoclonal antibody, neutralizing antibody, which is a therapy that you're to be given in this approval if you have newer onset disease, so a positive test and symptoms, and in particular if you fall into a high-risk group, you have underlying conditions or you're older. Then you can take this therapy, and in our studies, it reduced the probability that you go to the hospital pretty dramatically by 70%. So that's an important step, another tool now to help manage this disease just when we need it most. In terms of how it works, you're asking, what we did actually was when your body's infected with a virus, it mounts a variety of immune responses. One of them is we create antibodies, which have been much talked about in these antibody testing. These antibodies lock up the virus and dispose of it. What we did was took antibodies from surviving patients early in the pandemic. We isolated the very most potent ones, in this case, and now we make it in a factory synthetically and give it as a medicine.
This is really important, David Ricks. Can you suggest that this bacterial-like antibody therapy, almost like a bacterial antibiotic, could be a substitute for a true vaccine?
Well, we're studying what we call passive immunization in a setting where you're trying to prevent spread. In our case, we're looking at spread within nursing home facilities. It's similar to vaccination in a way. So when you get a vaccine, we introduce a killed or modified version of a part of a virus, and your body recognizes that as foreign and mounts its own antibody response. Here, what we're doing is we're giving you the antibody response of someone else prior to getting sick. It's in a study. It's not approved by the FDA, and we don't have the data yet. But that's a very interesting approach. And if we look at other viruses like Ebola even, this was the setting where these antibodies made the biggest difference. Of course, in the U.S. and I think around the world, nursing home patients, elderly in nursing homes, are at the highest risk. So this would be an important positive event if it occurred, and we should have that data in the coming weeks.
Dave, to build on what Tom's discussing, I think we're trying to ask the question as to whether we need a multi-pronged approach here, not just the advancement we heard from Pfizer yesterday, but maybe also complemented by what you're doing as well. One thing that stuck out for us all yesterday is just the storage of the mRNA vaccine that Pfizer are moving forward with and how difficult it is to store at really, really freezing cold temperatures. Dave, can you speak to that, the developments there on that side and how difficult it will be actually to distribute something like that widely and everywhere?
Well, for the messenger RNA vaccines, they are fragile molecules, so they need to be held at a very, very low temperature. That will likely not, I don't think that's going to be a major barrier once this is broadly available in developed markets with advanced medical systems. Where it becomes a problem is where refrigeration and available capacities in developing countries, is going to be much tougher and will take longer. That's why we have, 2 of the leading 10 vaccines are using this technology. 8 aren't, and likely won't have those refrigeration restrictions. I suspect some of those will work as well. I'd bet on that. And we'll likely end up with multiple shots on goal with vaccines. In the meantime, none of them will work 100% of the time. And back to the original question, we'll still need medicines like our antibody therapy to help those that will still get sick, hopefully at a much lower rate as we approach something like herd immunity, but you'll still have endemic disease. And we'll need therapies. There's many examples where this is true, including common respiratory viruses like RSV, where we have both vaccination and antibodies. They can go together. But together, I mean, this is in the last 48 hours, we have 2 important developments in the fight against COVID-19. I think the future is looking more certain and brighter for sure.
To build, though, on what John is talking about, there are some practical concerns as all of the pharmaceutical companies try to ramp up production. And I'm wondering, supply chain issues, especially as the pandemic worsens, the idea that all of these different pharmaceutical companies are trying to go for the same thing and probably sourcing some of the same substances, as well as using some of the same staffers. How well can you ramp up production of the antibody therapies to meet demand in the next couple of months?
Well, I wouldn't worry so much about that competition phase where we're competing our ideas. I think once it's clear there are winners, you'll see the industry come together to make product at scale. That's already occurred in the antibody space where Roche and Regeneron, who have a different approach from Lilly's, have teamed up. We've teamed up with Amgen and then also the largest contract manufacturing organizations in the world like Samsung and Fuji to build out that supply base. So I don't think we're wasting material by competing in that way. Of course, antibodies are complicated to make. One of the most complicated medicines we make, and we usually reserve them for severe disease like cancer and autoimmunity. Here we're talking about treating thousands, millions of people potentially with these antibodies. It will strain that system and we will have scarcity. That's for sure. That's why the FDA, last night when they approved this, really asked doctors to use it in the highest risk patients. That's appropriate. So we use it where it matters most.
Dave, these are serious issues. We have about 30 seconds left, and I'd love for you to do me a favor on just a lighter note. Can you explain the offside rule to Tom Keene in about 20 seconds? Can you do that for us?
Please.
You're talking about in football. Yes, of course. So offsides is when the offensive player is in front of the defensive player prior to the ball being struck. Of course, once the ball's struck, he can run in front. It doesn't matter. That's different from hockey, where the blue line is what matters.
Oh, thank you. That's very good. David Rick's there. And, of course, this is with the support of Eli Lilly to our Olympic Committee, which they've been committed to.
That's true.
John, for many years. I still don't get, I think a blue line would solve it. You don't have to make it Manchester City blue. You could just make, like a nice Chelsea blue line, and it would work out, John.
There you go.
I think David Ricks and his kids would like that.
David Ricks gets it. David Ricks of Eli Lilly. Great to catch up. We've got to get Dave back to talk about sport. Therapeutics. Do you get it, Tom? Do you understand it just a little bit more now? From London and New York, this is Bloomberg. From London and New York, this is Bloomberg Surveillance, and here is the price action this Tuesday morning. We'll do this in absolute terms and relative terms. In absolute terms, the Nasdaq negative, having a little bit of a problem in the last 24 hours. Let me emphasize, a big problem. The Nasdaq down by 1.4%. In relative terms, really underperforming the small caps in America. You see that against the Russell right now, down by about 2%, up 2% rather, on the Russell. If we switch up the board, yesterday it was about banks. Banks a bid again today. The KBW Banks Index up more than 10%. The why? The curve is steeper. The spread between 2s, 10s getting wider, the widest so far in 2020 of about 77 basis points. This morning, yields up at the long end, curve steeper again, up 3 basis points on 30s, up about 3 basis points on 10s as well. I'll finish quick on the FX market. Dollar weakness, the story of the last week. This morning, just a little bit more nuanced. Euro dollar 118.06. It's pound sterling where you find a bit of strength. Cable, Tom Keene, trading with a 132 handle.
132.38 on cable right now, and I'm really watching 10-year yield going through 0.95 now. To me, that's a big deal. 0.9527, up 3 basis points on the U.S. 10-year yield. To keep things driving forward here on economics, and yes, we do economics, but with everything else folded in, Michael Gapin of Barclays. We spoke to David Ricks from Purdue, and now we migrate to Indiana University and the work of Mr. Gapin, and of course his public service to the International Monetary Fund. Michael Gapin, when everything is said and done, there's all this hoopla, and then there's the American economy. Does any of this touch the American economy and the grim labor economy that we forecast forward?
Well, it does, but it does probably more next year than this year. I mean, David gave a great interview there with a lot of potential optimism about how we might treat COVID going forward and get to a population immunity as he spoke about treatments as well as vaccines. That's still largely, in most people's eyes, a 2021 story. As he mentioned with the news on Pfizer, there's certainly distribution issues there, but the news is positive, but it's not likely to be, say, influential to the labor market in the next, say, 3 to 6 months. It's more of a, say, 1 to 2 year story. So it feeds what I think is a constructive narrative. But it still means the economy and the labor market need some help in the meantime to bridge to that better scenario. So it may take at least a year or more to get the population immunity.
Then frame your calculation of the stimulus needed if we're subpar right now.
I think we can get by with something in the range that the Senate is talking about if it's targeted to where, say, most economists think it's needed, which would be replacing lost wage and salary income for those who are still unemployed and affected by work outages, as well as aid to state and local governments. I mean, the employment report last week was solid, except for state and local payrolls, which were down 130,000 on the month. We'll have to see if that's a one-off or a trend. If it's a trend, it certainly signals that budget pressures are becoming more acute. So I think in 500 to 750 billion, I think that's enough to bridge the large parts of the economy into the early part of next year when vaccines may be gaining more traction in terms of their effect. So more is probably better than less. I agree with Chair Powell on that front. I think more would be better than less, but I think we could get by something in terms of the size that the Senate is talking about. I think that would work.
In the meantime, Michael, the news yesterday about Pfizer's vaccine was unambiguously good. And what it raises is the specter that we might emerge from the pandemic and that it will lessen the scarring to the labor market. How much of a game changer with respect to long-term unemployment rates was the idea that we could get a vaccine sooner than later and that it would be this effective?
I think for us, we had already been assuming that we would get an approved vaccine by the end of the year, and that tens of millions of Americans, Brits and Europeans would all be getting vaccinated by the middle of next year. So that it confirms that timeline. But I think to your point, the real news in that, in terms of the potential upside, was that 90% effectiveness. If that bears out in the subsequent data, then it's a much more effective vaccine. So there is scarring going on in labor markets. The share of long-term unemployed continues to rise, but I would say that it would help to minimize scarring. I would say right now the number of long-term unemployed is still about half what it was coming out of 08-09. So it is a problem, but at the moment it's less acute than it was following the global financial crisis, and I think a vaccine could help minimize that going forward.
Michael, let's go with a better 2021 and think about the Fed's new framework and how powerful you think that reaction function shift will be as things pick up in the back half of next year. Put that to work for us. How powerful do you think that will be?
I think right now, I feel like the Fed is third in this. I think it's, in terms of the outlook and how to think about things, I think number one, it's medical advancement. Two, it's fiscal policy. And then three, it's the Fed. I think the Fed needs these other policy components to gain traction. So I think we need an effective vaccine. We need fiscal stimulus to provide a bridge. Excuse me. Then I think the Fed's accommodative stance and willingness to overshoot, or at least, wants to generate an overshoot. I think that reaction function then gains a lot of traction. If we don't get fiscal, if the vaccine turns out to be not all that effective and is more of a letdown, I'm not sure the Fed alone has ammunition.
So, Michael, this is a big question for January in the Georgia runoff then. Is your outlook predicated to some degree on what happens down in one state with the Senate runoffs?
It's not so much. I mean, we only assumed $500 billion in additional federal spending in our baseline. I think we went into the election thinking the Senate indeed was a coin toss. So we were not penciling in $2 and $3 trillion spending packages. I think if the Democrats do take both Senate seats, you've got upside relative to our estimates, but I think that's a fairly low likelihood outcome at this point. So for us, I think that's not as critical. I think for other parts of the progressive agenda, certainly it would be more critical, but I wouldn't say that that's a primary concern in how we see the economy going forward. I still think it's number one, it's about the vaccine. Two, do we get something out of fiscal? I think that happens either way, regardless of the Georgia Senate cases. And then three, I think we know the Fed's reaction function.
What is the true unemployment rate, Michael?
It's probably a few percentage points higher. So I think U6 is a more accurate reflection of where the labor market stands. There, I'm certainly taking into account that participation rates are several percentage points below where they were in pre-pandemic times. So 6.9 on U3 is great, but I would give a nod to something more like in the 7 to 8 to 9% range. I think obviously we want the unemployment rate to get back down below 4, but we also need to get participation back higher where it was prior to the pandemic. So I would look more to U6 than to U3.
Michael, I remember a time when we actually looked at the virus counts, and when we would see that the pandemic would be worsening, people would get nervous, and they would say that would affect the labor market. And now people are saying it doesn't matter because we're going to have a cure and it's going to be great. But how much does it matter, the fact that we are having a worsening pandemic and the prospect for more restrictive policies in the U.S.? How much could that shape the next couple of months economically?
So I think it does matter, and I would hope that we haven't given the implication that that it doesn't matter for labor markets. I think the assumption that most of us are making is that although COVID cases are rising, we think it's unlikely that states will resort to widespread lockdowns again like we had last spring. I think the data has shown that you can get close to lockdown mitigation effects if we do things like testing and tracing, wear masks, and have restraints on higher risk activities like restaurants, bars, and indoor activities. So I think that's our assumption, is that we're not going back to locking down economies and halting manufacturing production and not producing autos. I think that's the key we're making. So it will have a dampening effect. I think there's no question about that. States, you can see what's happening in Utah, for example. That's likely to get replicated where restrictions increase. That will provide a break on activity. It's just that right now momentum is pretty strong in the economy. And so I think it'll provide a break on activity, but it doesn't change the direction of where we're going. That's the bet we're making right now.
Michael, great to catch up. Stay safe. Michael Gapin there, Barclays chief US economist. Let's work through this just quickly, guys. Lisa, I think you raise a really important point, namely on adherence to these restrictions over the next several months. I was listening in to the news conference with Prime Minister Boris Johnson yesterday, and he responded to the new vaccine improvement, and you could hear the cautious tone in his voice. There was optimism about 2021. But Lisa, it was more about the next several months and the belief that perhaps some parts of the population would say, you know what, great, vaccine on the horizon, we don't have to do this anymore. That's the concern going deeper into winter.
You can hear all of the politicians, all of the policymakers trying to thread this needle. The idea, yes, we want to give people hope, but not too much. Don't get too excited, because we're all sick of it, John. I mean, the reality is nobody wants to keep socially distancing and wearing masks and not being able to travel. And you can feel it when you go on the streets. I don't know about in London, but in New York, I know, you go around and people are not always wearing masks. Generally they are, but they're closer together. There's a feeling of letting up the pressure, and that could lead to a pretty rough winter.
Well, to apply this to markets, Tom, I think there's a psychological bias to buy stocks, to have that rotation. I was talking to Guy Johnson. He'll be on air in a couple of hours' time on Bloomberg.
Yeah, when you're done.
Guy and I were talking about that. The bias to buy. The bias because everyone wants this over. The bias around this narrative, this rotation. Psychologically, Tom, it's one everyone wants to see work.
There's a wall of money. There's no question about it. Talking to the Lieutenant Governor of New York, you see the emergency in Western New York and how things have shifted over 2 weeks. What Michael Gapin just said, John, I just think is absolutely profound. We don't know where the unemployment rate is. We got a 6.9% statistic. And, well, you know what? The U6 is 12.1%. That gap, I don't know where the unemployment rate is, John, but Michael Gapin, this is to me the headline of the moment for America, for President-elect Biden, and frankly for President Trump. That gap is ginormous.
Yeah, the headlines that we talk about on the first Friday of each month are not the headlines that a lot of Americans are living with across much of the country. Alongside Tom Keene and Lisa Abramovich, I'm Jonathan Ferro. I'll be running away to another property in about 15 minutes' time. From London and New York this morning. Good morning. The Open coming up shortly on Bloomberg TV, and radio. Much more of Bloomberg surveillance. With S&P 500 futures down 14. We're negative 0.4%. This is Bloomberg.
With the First Word News, I'm Rishika Gupta. Senate Majority Leader Mitch McConnell has given President Trump cover for challenging election returns. McConnell says the president is within his rights and has no obligation to accept projections based on vote counts that Joe Biden won. McConnell and other Republican leaders in Congress haven't congratulated Biden since news media called the election in his favor on Saturday. Obamacare returns to the Supreme Court today. Justices will hear arguments over whether the Affordable Care Act is constitutional. The Trump administration and conservative states argue that it's not. They say the entire law was rendered unconstitutional when Congress eliminated the penalty on those who remained uninsured. If the majority conservative court agrees, more than 20 million Americans could be left uninsured. U.S. regulators could give the Boeing 737 MAX the okay to resume commercial service as soon as next week. The FAA is finalizing their review of fixes to the aircraft. Boeing's best-selling jet has been grounded since March of 2019 following 2 fatal crashes. And in Peru, President Martin Vizcarra has been surprisingly booted from office. The country's Congress overwhelmingly voted to impeach him over allegations of corruption. Vizcarra said he won't challenge the vote through legal channels. The head of the Peruvian Congress will become the interim president. Peru has been recovering from one of the world's deepest recessions. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points. So continuing in this knee-jerk risk-off feel.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
With this particular vaccine, no corners were cut. We followed this tried and true methodology that has worked so well for us in the past and continues to deliver really superior and safe products. What's really been quick here has been that we undertook the manufacturing in parallel.
John Burkhardt of Pfizer, of course, working on drug safety there. We welcome all of you on Bloomberg Radio and Bloomberg Television. We've been doing a lot today, maybe the most ever, on the pandemic, on the virus, the vaccines, and the antibody treatments to come. We finished strong in this hour. Lisa Abramowitz and Tom Keene with Deborah Fuller from the University of Washington School of Medicine and Microbiology. And one of the great things of Deborah Fuller is when she wanders down to the undergraduates, comes out of the rarefied air of the Fuller Lab at Washington State, and speaks to fundamentals of microbiology, 410. That's the gut course at one of our great esteemed programs on microbiology. Dr. Fuller explained the difference yesterday between a vaccine and an antibody treatment. They're really in two separate worlds, aren't they?
They are. Vaccines are really designed to protect you from infection, and the antibodies are designed, the preformed antibodies are designed to treat an existing infection, and that's the key difference between the two.
Is an antibody treatment a la Lilly and others, is that simply a path to get to the vaccine? And if so, when do we get to the vaccine?
What's important about the antibody treatments is it provided some insight into what a vaccine might need to do. If the antibody treatments are able to help mitigate disease in people already infected, they are really based on the types of immune responses that we're designing our vaccines to induce. So the success with these antibody treatments provided insight and optimism that a vaccine that induces the same types of immune responses would also be effective.
I love that, Dr. Fuller, I love that Tom asks about the bacterial versus the viral response. I just want to know, based on what we saw yesterday, based on the news out of Pfizer, how close are we to the end of this pandemic?
That's a great question. With Pfizer's release of their preliminary data at 90% efficacy, that's really promising. That means they should be in a position to get emergency use authorization before the end of this year, and you may see the limited rollout of their vaccine in December. And then they would be in a position to complete the study. They haven't quite completed it yet, so this is preliminary data, and they'll continue to monitor the events. And assuming the efficacy holds up, that's we don't know that for sure. It may go down, but even if it goes down and the efficacy stays above that 50% mark, which I would expect it would given their preliminary data, we could see a more widespread rollout of the vaccine by early spring.
Okay, does this mean basically that by early spring, we could start not wearing masks and people could start traveling and life gets back to normal? That's not true. What's going to happen is really going to take time to distribute this vaccine and there's going to require really a widespread vaccination campaign. We're going to take time to be able to get enough people immunized in the population where we're going to start to get the levels of immunity that can slow the pandemic down. And during that period of time, we're going to have to continue to practice the social distancing and wear our masks. We also, we're pretty sure that that it's not really going to take one vaccine. You're going to start to see other vaccines that are in their late stages of development also begin to roll out. Pfizer's announcement is promising to those vaccines too, because they're designed to induce the same types of immune responses, and their earlier data suggests that they should be able to achieve similar immunity. It's really going to take a team of vaccines to really immunize billions of people worldwide, and we're going to need that time to continue to wear a mask and social distance. But we'll see the light at the end of the tunnel there. And I hope
Deborah, a social question away from your esteemed medical skills. When we get a vaccine, what are we going to do? Tell people by a wristband or a tattoo or whatever that we had it? I mean, how does that work when you roll it out?
Well, just like other vaccines that we take in the population, it becomes part of our medical record, and that information can be, anonymously shared with public health officials in every state and community, and they can begin to document the rate of vaccination in communities worldwide.
Deborah Fuller, thank you so much. Greatly appreciated. The University of Washington. Just thank you so much today. So at least I thought today our work on the pandemic was just extraordinary. Our team maybe had their best day ever, just killed it.
Well, this is the story of the day, right? I mean, if we can end the pandemic, then we can go back to the airplanes. Or we can go back to the to AMC, which is absolutely on fire. And that's what you're seeing in the stock market with the rotation continuing. And yet there is a question, how much daylight is there between now and the reality of the pandemic and the end?
Yeah, but I thought, Lisa, what we got out of all these different interviews is the market's way out in front of this, society's way out in front of this, and it's sometime out in 2021, to be polite. Markets have moved here, red and green on the screen, still, bank stocks still doing well, some of the action's still there from yesterday. But Lisa, I got to go to the 10-year yield. Now, granted, it had a spike up yesterday on the surveillance cursor. I can tell you, at 10:22 yesterday, the 10-year got up to 0.97%. Other than that, Lisa, we are up to new yield here with a higher yield and lower bond prices.
Yeah, we're getting close to that 1% threshold. Again, 1% 10-year treasury yields, not exactly a really high yield or expensive borrowing cost, but still the highest levels that we've seen since March. I find interesting how much this may be what's fueling the risk-off feel that we're seeing in the NASDAQ today. The idea that if you start getting higher yields, all of a sudden you can't justify the sky-high valuations in some of the stocks that have been perceived as the havens. And how much is that going to be the driving narrative in the weeks to come, Tom?
I'd like to talk to Chris Verone about this. We haven't done that yet, but that'll be interesting to see how much of the cyclical pop that we saw yesterday, the small cap pop, was just to bounce off the proverbial bottom, and then where. Eventful day here. Lisa, help me here with a data check right now. I'm watching yen 105.31, stasis, but nevertheless weaker yen. What's the single thing you're watching, Lisa?
Well, I mean, the dollar has been the story, right? And today's a much more nuanced story, as John was talking about. It had been dollar weakness. We're not necessarily seeing that today. Again, are we getting risk on or risk off? The narrative is not neat today, and I think that's important. Yeah. People are nuanced, which makes me wonder how much, to your point earlier, how much is this people just getting stopped out of their positions, and how much are people rethinking the reflation trade as having legs? And that's what we will be seeing in the next couple of days.
Let's remember, we're rethinking here with VIX 25 and Dow Jones Industrial Average Futures 29,210, about 800 points from that momentary print of 30,000 on Dow Futures that we saw yesterday. It's a fun day for Michael McKee and myself. The president of the Dallas Fed, Robert Kaplan, we will have a number of important interviews. McKee will do a smarter interview than me. Mike McKee will do that for Bloomberg. And then I will be joined by Robert Kaplan at the Council on Foreign Relations for a longer, broader interview as well. Please stay with us through the day. Mid-morning with John Farrow next.
So do you get tired of people calling you a jazz legend? Do you feel older when they say that to you?
Yeah, I like the word jazz. I don't like the legend.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
From New York and London, for our audience worldwide, good morning, good morning. The countdown to the open starts right now, 30 minutes away from the opening bell, with S&P 500 futures negative, but Russell futures still flying. We begin with the big issue, a rotation for the ages.
Stocks where they were boosted up. Sector rotation as a result of this vaccine news.
From defensives to cyclicals.
People to feel more comfortable about the reopening trades.
That rotation already taken place.
Cyclical sectors should start to get bid more seriously.
We have this perfect storm around some clarity.
We're at just the beginning of the move from growth to value.
Continued investment into some of these more value perceived names.
There's definitely going to be some rotation, internal rotation, at that over the next couple days.
The vaccine news most certainly helps.
I expect some of these outperformers to really rip, the reopening trades in particular.
Kate Moore of BlackRock at the end there on this equity market. As we roll over on the S&P, we roll up again on the Russell futures contract. It's been a story of buy stocks, ask questions later. This was Citi on the vaccine development, catalyzing a rogue wave of rotational optimism across global bond curves and risk assets alike. That said, there's a great deficit of information we're facing when analyzing a post-vaccine landscape with plenty of room for disappointment. On this story, I want to bring in Sarah Ponczek for more. Good morning to you, Sarah.
Good morning to you, John. A rotation for the record books. We've heard this was coming since September. Last week, there were doubts with tech once again taking the lead. But yesterday, it just all came crashing back. Small caps, value, your reopening trade. We can view this through the lens of a couple of smart beta ETFs. As you can see on the green side of the equation yesterday, a Spider S&P dividend ETF. Notable, though, the makeup of this. The top two holdings are energy stocks. Energy yesterday up 14%. The highest sector weighting here is also financials, up 8% yesterday. Value really just surged yesterday. On the opposite side of that, we have growth lower. We have momentum lower. In fact, a long-short portfolio of momentum tracked by Bloomberg yesterday was down more than 12%. Of course, size was also a factor here. On the large cap space, if you look at the equal weight version of the S&P 500, it had its best day on record relative to the market weight version of the S&P 500. So those smaller stocks within the large cap space really did much of the heavy lifting, as you can see here. Also, you look at the Russell 2000 versus the NASDAQ 100 to look at small caps versus mega caps. Second best day on record for the Russell 2000. And this is just playing out once again this morning. Russell 2000 futures higher this morning, up 1.5%. Meanwhile, as you can see here, NASDAQ futures once again lower by more than 1%. S&P futures are being dragged lower, albeit modestly too, down 0.3%. Meanwhile, I mentioned the Russell 2000 higher, but rest of world's assets are higher too. European equities, also Asia-Pacific equities too, John.
Sarah, this is the question of the moment, whether yesterday was just about a catch-up trade or the start of something more durable. From the people you speak to, what are they saying right now?
A lot of people do seem to believe in this. We were looking for something different this time around. Well, if we do get true vaccine news, this is a new addition to the equation. The idea that if you actually have a vaccine that is going to be distributed, well, that could get us back to normalcy sooner rather than later. However, there is still a very large question mark. How long does it take to get this finally approved? And then how long does it take for it to actually be fully distributed, John?
Sarah Ponczek, the latest on the price action. I want to check in on equity futures just quickly. This has been the story of yesterday, 27 minutes out from the opening bow. Just the flavor of the same thing. The NASDAQ underperforming, much more so relative to the Russell. Russell futures up by 1.5%, the NASDAQ down by 1.29%. I keep asking the same question. Is it a squeeze? Is it something more durable, a trend that will build over time? This is what BMO's Brian Bowski has to say, recommending investments in both value and growth. He writes the following: the strength of the U.S. economy remains the consumer. Focus on what they're buying. Communications, services, technology, online retail, and select lifestyle discretionary. For exposure to a potential cyclical rebound, focus on financials, consumer discretionary, and technology rather than energy and industrials. Brian joins us now for more. Brian, let's just start right there. Your response, please, to the last 24 hours, and we'll build from there.
Well, good morning. Thank you so much for having us. If you don't think yesterday was a momentum trade, it was. Momentum works in both directions, and we've been waiting for this big value move. Everybody's been trying to make this value call or the cyclical call or small cap call. Well, they got it yesterday. And obviously, it's wonderful news on the Pfizer and the Lilly, and it's fantastic. And the market clearly was exuberant about it. I'm not trying to be Johnny Ranklow, but it's going to continue to be a process in terms of how we roll out these drugs and how we kind of get back into regular living. In the meantime, you know, the market, society has done a great job learning how to coexist with the virus. I don't think the market is as easy as a growth or value or a small versus large cap. This business of investing is not easy, Jonathan. And anytime that people think it's easy, I think they're going to get smacked around. That's what typically happens. So again, from a fundamental perspective, looking out longer term, the stay-at-home stocks, and many of them are still some of the fundamentally strongest companies in the world. And we don't know what kind of lockdown procedure is going to happen under a Biden administration. We don't know how bad the COVID is going to become over the next few months. Obviously, it was a great day yesterday for all of the market. One of the most important things that Sarah Ponczek said during her preamble was the equal weighted S&P 500 in terms of the performance. That is very important in terms of the broader performance of the market from a fundamental perspective. We continue to say that, and we've said it on air with you as early as August, that the second half of 2021 is really going to be the true test on when fundamentals from a broader perspective really begin to improve.
So, Brian, to be clear, you come on this program several times in the last couple of months, 36.50 year end, next 12 months, 38.50. We can talk about the price targets in a moment, but you were bullish at the index level. And, Brian, I want to talk about that. Is this a story you can continue to play through the index, or are you still suggesting to go all the way down to single stock level stories?
It's a great question, and I think yesterday was a fantastic example of that, Jonathan. Think about when retail stocks were rallying, and a lot of these retail stocks have been dramatically underperforming. You have a concept like Ross Stores versus TJ Maxx. You know, our bet, we're making bet in the portfolios that we run for BMO on TJ Maxx, exquisitely run store. You don't have to own both, we don't think. We want to own one, and that's really the true essence of buying stocks versus ETFs. Same thing with respect to financials, Jonathan. If you think about the fundamental construct of the financial sector, you want to buy themes, scalable themes, whether or not it's BlackRock, Bank of America, JP Morgan, Morgan Stanley, versus some of the regional banks, quite frankly, that in this lower for longer interest rate environment will be challenged in terms of net interest margin. So you want to buy scalable assets. So again, it speaks to this notion of being a stock picker. And oh, by the way, in March, when we made our call that March 23rd kind of kicked off the second half of the bull market, we said that leadership in terms of investing would be stock picking, not indexing, not quant, not macro, but stock picking. And so from a fundamental perspective, we think that is very bullish for U.S. stocks.
So, Brian, I want to pick a sector and work through this with you and just work through your process for our whole audience and just bring up the financials again. What you said there on the banks, I think, is really important. Yesterday, what we had was a catch-up trade. KBW Banks Index to the moon, a rocket ship off the back of a steeper yield curve. But to your point, for that to be a durable trade, you need to believe that that's not just one day's price action in the Treasury market, that turns into a quarter, into a year of a steeper curve and higher rates. The Fed, for most people, isn't going anywhere for a long, long time. So as you look at the banks this morning again, Brian, the big names up again, the likes of Citi, the likes of Goldman, just muted moves. Compare the big names to the regionals and help us get a little bit more selective.
You really set that up beautifully. So if you want to buy an ETF to diffuse your risk, that's fine. But remember, as I said in the beginning, momentum works in both directions. And if there is a risk of things beginning to lock down again, the ETF is going to be sold hard. But as things begin to recover again, you have to rely on fundamentals. So as the quarters unfold here, you look at a bank like Bank of America or even some of the Canadian banks that have multiple asset divisions, whether or not it's wealth management or capital markets or the commercial bank, we're going to see stronger quarter-by-quarter results versus the regional banks, of course, which just really focus more on commercial loans or personal loans. And in this lower interest rate environment, clearly our great economic team believe that we're not going to see anything until 2024, perhaps, in terms of the Fed changing their stripes. So the yield curve is going to be important, but the yield curve can move in both directions. We saw the big move to the upside yesterday, but it can come back down again, and that's going to hurt the more net interest margin sensitive banks like the regional. So that's why we like the big money center banks and the brokers and the asset managers.
Brian, final question for me, just on the year-end and 12-month targets that you have. As I mentioned before, they're unchanged, 36.50, 38.50 year-end and 12-month targets for BMO. Brian, can you tell me then, nothing about the outlook for you changed in the last 24 hours? Is that a fair characterization of where you're sitting right now?
Well, I think we don't best for one day, number one. We changed our targets in August, so we've been able to capture this upside. Is our 36.50 target too low for year-end? Probably. Are we going to adjust it with 2 months to go? No, I think that's more of a mathematical game. But we still think the bottom line is a year from now, stocks are higher. 5 years from now, stocks are higher. We still think we're in a big 20-year bull market, and the second half began this year.
I didn't expect you to change the call on the program. Brian, it's great to catch up as always. Come back soon. Brian Bowski there of BMO on this market. This equity market, the trend from yesterday continues just a little bit. It's a flavour of it. The Russell still climbing, the Nasdaq still falling. On the action of this morning, let's bring in for the first time this hour at the market desk, Abigail Doolittle.
Good morning to you, John. And it's interesting because we're actually seeing some of the reopening rotation from yesterday fading as we move closer to the opening. As we take a look at some of the pre-market movers, the airlines, the cruise lines earlier had been higher, huge moves up yesterday on the possibility of the economy and travel and leisure starting sooner rather than later. But now we have American Airlines down 2.6%. They're actually taking advantage of yesterday's stock surge and doing a stock offering. Norwegian Cruise Lines is down. Interestingly, ExxonMobil had been higher earlier with oil, now down 0.9%. The banks, though, as you and Brian were just talking about, still getting a bid, a more modest bid, as the yield curve does steepen for a second day. Let's see whether that trend continue. Where the pain really is, not surprisingly, with the Nasdaq futures down more, we have Amazon down once again, Microsoft being taken down with Amazon. Beyond Meat, also a big drag on the Nasdaq this morning. Interestingly, they missed estimates because folks are no longer stockpiling around the virus. Let's see if that changes as the virus seems to really be reemerging here. And then finally, Zoom, another stay-at-home winner, not so much today. So we have shades of the reopening rotation working today, but just certainly much more muted than yesterday as those stay-at-home stocks still lots of pain, John.
Abigail, thank you. Much more from Abigail through the hour. Coming up on this program, the US reporting another record number of new COVID cases, prompting governors to scale back reopening plans. That conversation up next with Nuveen's chief investment strategist, Brian Nick. From London and New York this morning, good morning. This is Bloomberg.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Masks do not negatively affect our economy, and wearing them is the easiest way to slow the spread of the virus.
We need to change our mindsets.
We cannot afford to debate this issue any longer.
This is not forever and always.
We'll see some counties moving backwards, not forwards.
We have to shake off the pandemic fatigue that I know we all feel.
We may get over-exuberant because now we believe we have a safe and effective vaccine.
We basically have a 6-month window to beat the fatigue back and beat the virus into the ground.
Do not take your guard down.
State leaders expressing growing concern after the United States reports another record number of fresh COVID cases. Governors across the country introducing new measures to contain the spread, with California and New York preparing to scale back reopenings. I want to bring in Bloomberg's international economics and policy correspondent Michael McKee now for more. Good morning, Mike. News was good yesterday. The next couple of months is still going to be tough.
Yeah, I'll let the audience in on a little secret. Whenever the news starts to be good, John calls on me to be the wet blanket. We do have a lot of concern about where this is all going. Joe Biden said yesterday we're looking for a long, dark winter, and that is probably true. The U.S. reported a record number of cases again yesterday, the 5th straight day, with more than 100,000 new infections. We appear poised to hit record hospitalizations later this week. As you mentioned, states are starting to cut back on businesses. New Jersey and Massachusetts imposed restaurant curfews. The California governor, you heard, is talking about various counties taking steps back. We're seeing in the past couple of weeks that activity is slowing down, mobility, slowing down. The open table numbers, restaurant reservations are falling back, which brings the jobless claims numbers back front and center, perhaps. I know you love that one, John. It might be something of a real-time indicator of where the economy is. If businesses have to shut back, we may see more claims. The Fed last night, in its semi-annual financial stability report, suggests there are reasons to be concerned about the economy if we continue to see this kind of bad news. Uncertainty remains high, and investor risk sentiment could shift swiftly should the economic recovery prove less promising or progress on containing the virus disappoint. Some segments of the economy, such as energy as well as travel and hospitality, particularly vulnerable to a prolonged pandemic. I just finished talking with Robert Kaplan, the head of the Dallas Fed, and he said all of that is correct. The Fed is continuing to look at what it can do, but it would help to have additional stimulus. And it would also help to wear masks, socially distance. We'll hear from Joe Biden again today on the issue, but the person we're really waiting for is Mitch McConnell. The stimulus bill still stalled. They've generally agreed on more PPP, unemployment, and trying to get some sort of education aid, but the liability shield and aid to states and locals is a concern, so we wait to see if Washington responds.
I like President Kaplan just a little bit more for speaking to you first, Mike, and Tom Keene second. I mentioned that earlier. I'm not sure Tom's too happy. At least on the outside, he says this is what he expects, but I'm not sure he's happy. Mike, thank you, sir. Thank you very much. Nuving's Brian Nick saying the vaccine remains the key to markets. He writes the following: the ultimate stimulus in 2021 would be the arrival of one or more effective COVID vaccines. Such a vaccine and the return to normal life it represents would be the ultimate economic stimulus, not just for the United States, but for the entire world. I think we all share that sentiment. Brian joins us right now. Brian, are you a buyer of this durable rotation?
Not necessarily. I think we've seen it a couple times in the last couple of sessions where there's been sort of a one-off risk event that's passed versus the election, where we got that pop in healthcare stocks the day after, given that it was going to be divided government. And then yesterday, the news of the successful vaccine trials from Pfizer. I think we need to wait and see just how much the economy is going to be able to ramp up. I think we have this very optimistic view that by this time next year, things will be largely back to normal because of the vaccine. But between now and then, it's going to be very tough sledding for the economy. The markets can decouple from that. We can get a rotation into cyclicals. We can get a little bit of an outperformance from value. But it's all perspective, because right now, we're still in pretty dire straits with what we're expecting to see over the next couple of months for the economy. And that may put a damper on investors' risk appetites.
Well, that's the issue, Brian. This market's living in the second half of 2021. For everyone else, we've got to work through the next couple of months, and the next couple of months is going to be difficult. That can really shake up sentiment in many ways through winter, through Q4, into Q1 21. I worked through the financials a little bit earlier with Brian Bowski of BMO. Brian, I'd love to touch on the treasuries with you just quickly. 2s, 10s, 30s, 10s and 30s selling off again today. Yields are higher. We're talking about that durability in the equity market. Can you talk to me about how durable you think this move in the bond market will or won't be? Because quite clearly, we've added a lot of debt to this economy, and I'm trying to understand our tolerance for higher interest rates.
For sure. And if you think about it as a supply and demand dynamic, supply is going way up. Demand has had to have gone up just as much, if not more, to keep treasuries at the prices they're at. I think the move that we've seen in longer term rates is durable, because I think what we've really seen over the last week is not so much an improvement in the base case. I think people did expect a vaccine in the second half of next year, but I think we've seen a reduction in the bands of uncertainty around that base case. And that's one of the things that leads people to own treasuries. When they're really uncertain, they want to get into those safer assets. They feel like they can be a hedge against risk elsewhere in their portfolios. And if there's less uncertainty with regard to the election, the policy outlook, or the arrival of a vaccine, there's going to be less demand for those treasuries. And I take your point, we're only looking at creating more and more of those treasuries over the next certainly 12 months, and I'd say beyond that as well. So supply is going up. Whether demand continues to meet it, I think remains to be seen, and there is a risk, and we're actually talking about it this week at our Global Investment Committee meeting. Is there a risk, an upside risk of somewhat higher inflation or just a much steeper yield curve next year that forces the Fed to think about new policy measures?
Well, let's play around with this word risk, Brian. Clearly, several months ago, risk was somewhere else. In the last 24 hours, risk was where the perceived safety was several months ago. Big tech, treasuries. Can you speak to that, Brian? How much risk do you think there's still left even after a massive repricing?
So in terms of the technology being sort of the defensive work-from-home trade, I think that there's a little bit of that unwinding going on. Again, as we look toward more certainty to a renormalization next year. But we're looking at, long-term, 5 years, 10 years. A lot of these technology companies, they weren't relying coming into this on the idea that there was going to be a pandemic and a work-from-home environment. They were relying on just this strong secular growth, move to more online sales, online shopping. So we think those secular trends are still there, and that is not a sector that's under grave threat of a massive reversal. Treasuries, I think similarly, we're in this lower for longer interest rate period. There's a huge amount of demand out there from U.S. and international investors for owning high-quality assets. There's a limited number of those assets, so we don't think we're going to see the 10-year Treasury at 1.5% anytime soon. Certainly not 2.5%, 3%, which would be historically low levels. But we don't see it getting back there, even with a return to normal in the economy next year.
Brian, we've got 30 seconds left. Final question from me. It's a version of something I asked yesterday. I'll ask it of you. What do you think the biggest difference is in the post-COVID world compared to the pre-COVID world?
I think a lot of habits that people have gotten into are going to be there to stick. So we had a forecast for online sales in the United States for 2025. We hit that target in the middle of 2020 because of the pandemic. I don't see it clawing back and people moving back into necessarily brick and mortar retail. So I think the trends that were with us that accelerated during the crisis, maybe people be a little bit more flexible with their work from home arrangements, people doing more shopping online. I think those are the durable changes, and they really just brought forward where we thought we were going anyway. So those trends are just going to continue to remain accelerated from where we thought.
Brian, I'm looking forward to having you back in the studio with me at some point in 2021, and let's hope it's not too long. Brian Nick there of Nuveen. Up next on this programme, the Alice Action you need to know. That'll be next in our morning calls. Then later, John Hancock's Matt Miskin joins us for the opening bout. The cyclical tilt continuing, the euphoria taking just a little bit of a breather. From London and New York, this is Bloomberg. Big tech underperforming once again this morning. Good morning to you all. That would be a key feature of the conversation around the opening bell. Equity futures on the S&P down about 1/3 Here are the morning calls to look at some of the analyst recommendations on Wall Street this morning. We begin with D.A. Davidson upgrading Wayfair to a buy, a 280 price target. The analyst citing an attractive valuation after recent vaccine development sparked a 22% sell-off on Monday. Next up, the B of A downgrading Ralph Lauren to neutral, a $90 price target. The analyst expecting a slow sales recovery with COVID-related headwinds fueling inconsistent demand. And the third and final call from UBS, upgrading Beyond Meat to neutral with a 107 price target. The analyst seeing a more balanced risk-reward with COVID challenges and headwinds now priced into shares. That stock taking an absolute beating this morning, down more than 22%. Up next on this program, it's the calm after the euphoric storm. That conversation up next with John Hancock's Matt Miskin. From London and New York this morning, the cash open up next. You're watching Bloomberg TV.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Took off the Dow from the market check because we're better than that. I wanted to show you the picture of this equity market going into the opening bell in New York City. NASDAQ futures underperforming, outperforming the Russell. It's about where you're positioned in this equity market. It's about the rotation. Will that trend continue? There's your opening bell. Get straight to foreign exchange. Switch up the board. Euro dollar with a nice little lift. Euro dollar 118.24. The news out of Europe, the EU, clearing that hurdle to unlock that 1.8 trillion euro budget. That's stimulus. That's good news out of the continent in the Eurozone. We'll talk about that in just a moment. I want to work through the price action. We'll get to the tech story, then get to the regional story. and get to Europe as well. Right now in the bond market, yields higher by 4-5 basis points on a 10-year to about 97 basis points. That's the new line in the sand, the upper end of the trading range on a 10-year Treasury in the last 5-6 months. And in the commodity market, we breathed some life into the commodity trade in the last couple of days. $41 almost on WTI, up another 1.7%. That's the cross-asset price action. Let's get the movers at the opening bell at the market desk. Here's Abigail.
John, well, with those huge divergences, the NASDAQ down sharply, the Russell 2000 up sharply. Let's start out with the pain, and that has everything to do with big tech, and that was the pain yesterday. Amazon really led the way, the stay-at-home trade falling apart yesterday. Then the sentiment around Amazon led to a somewhat ugly close for the tech trade yesterday, with Apple and Microsoft following suit. That is the case today, although you see Apple off the lows. Alphabet also sharply lower. Facebook not on this board, also sharply lower. The problem here, as you know, John, this board right here represents more than 20% of the S&P 500, more than 40% of the NASDAQ 100. So the sentiment really is negative around it. The optics of the world's biggest companies sliding, even if it's for a good reason, the possibility of a reopening happening sooner just doesn't work well for the market. So that is why the NASDAQ 100 is down so sharply. As for what's working on an individual basis, the top sectors, of course, energy, materials, and financials. But we have some big healthcare winners once again. Pfizer up for a second day in a row, up 2.5%. Of course, around that vaccine possibility with 90% efficacy in an early study. BioNTech is once again rallying its partner. We also have Moderna rallying, another vaccine possibility company. And then Eli Lilly, of course, its antibody therapy was granted emergency use authorization. That stock is up. So we do have some virus winners once again, John, here on the open.
Abigail, thank you. 2 minutes into the session, here's a picture of the market then. The S&P 500 unchanged, outperforming, top of the pile. I usually say bottom of the pile, but top of the pile today. Energy once again. Financials in there too, up 0.9%. That steeper yield curve really helping out the banks. There was Brian Bowski of BMO mentioned earlier on the program. What's durable here? What's the squeeze? What's the catch-up trade? They're questions we'll ask over the coming days this week as we continue to see this rotation play out. That's the story at the sector level on the S&P 500. News out of Europe, I mentioned it once, I'll mention it twice. Clearing that hurdle to unlock 1.8 trillion euros of stimulus, that budget, getting the green light. That's good news for Europe, and good news for a man who I know is long Europe, TPW's Jay Pawlowski. He was weighing in on the rotation into value recently, warning there could be more pain ahead for the tech sector.
Stimulus plus a vaccine equals high